commonwealth.com to learn more. We are joined right now by Sean McCarthy, CEO at Build America Mutual. Sean, thanks so much for joining us. Thanks so much for putting us up in your building here.
Jen and Paul, it's really great to have you here. We're thrilled to be the host.
One of the big stories today, Charlie Munger passing. Any experiences, any thoughts there? You've been in this business a long time.
You know, Charlie Munger was one of the great credit thinkers, really in the history of credit thinking. Last night I actually reread an essay that he wrote when he was in his late 60s and then rewrote when he was 81. It's called The Psychology of Human Misjudgment. He essentially articulates 25 ways that people convince themselves to make the wrong decision. It's excellent. I recommend, I'm sure you can get it right online, but I mean, it shows how brilliant an individual he was.
Yeah, absolutely. Yeah, but the stories we're seeing in the reporting today is really, I think, bringing that to life for a lot of people. All right, Build America Mutual here. Tell us about your business. Tell us about, really, explain to our listeners kind of really what you do, how you guys are integrated into the municipal bond market in this country.
Sure. Build America Mutual is an insurance company that guarantees municipal bonds. And so essentially what we do is we act like a parent. If you have your kids and they get a student loan and you need to co-sign for that student loan, you want them to get a job and pay it back. Our job is if they fail to make that particular payment, that we make that payment for them. Our job is to sort of make bonds more secure by being AA rated, or we're AA rated by Standard & Poor's. And in doing that, we create greater stability in the market for the bonds, less volatility in terms of how they fluctuate. And we provide credit diligence, which we share for free on our website. They're called credit profiles, a description of each deal that we underwrite, and we update that annually. And it's just available as a service because we're a mutual insurance company.
I love that analogy, the parents of the bond market, keeping all the kids in line. But now let me ask you, what's the demand for insurance in this particular type of market?
So it's so if you think about what the insurable market would be, it's not before the Great Recession. Municipal bonds were guaranteed up to about 60% of the total market, which would have been about over 80% of what could be insurable. So if you look at the market as a whole and you think that, AAA bonds won't use bond insurance, and there are certain credits that are non-investment grade or outside of the underwriting appetite of ourselves or the industry, what's left in the middle are insurable transactions, and in that area, about 25% of the bonds are insured. So that's quite a big growth. It's about a 30% growth since COVID started in terms of how much market penetration there is. And
so has that changed pre-COVID to post-COVID?
Yes, it has.
So investors demand more insurance, more guarantees, more stability now?
They're using bond insurance more than they did before. And so there's a number of things that bond insurance really does. It provides, not only is it providing the default protection, which I described as you standing behind your children and their student loans, but it also provides a stability in the market, and it provides a security so that you may not have the time to understand small or complex credits. We're guaranteeing them, and then essentially what that means is we're promising to pay timely payment of principal and interest on that bond when it's due. So there's different than other forms of insurance, which once you file a claim, then there's a negotiation. We pay immediately, and then we mitigate later, which is one of the strengths and why individual investors can count on the strength of a financial guarantee.
Can you give us a sense of what the sentiment is that you're experiencing in this market? And it's kind of like a pre- and post-COVID question, but also, is there some key lesson about investor psychology, as we started off talking about at the beginning of this segment, that you'd want to say that you've noticed?
So I'd say two things. One is interest rates have gone up a lot. So the primary market, meaning the overall volume in the market for new issue, has been lower for the last 2 or 3 years. That being said, the new money portion, the portion of the market that is just building new projects, new schools, new roads, this year will be its second highest year ever. 2022 was the highest. But there are no more refinancings, if you just think about it. with interest rates going up, the concept of saving money by refinancing that bond has gone away. And that was about a third of the market historically. So that's one thing. But if you look at the sentiment in the market overall, a good example would be this last election in 2023. There were 70% of all bond issues that were on the ballot were approved. So that was $60 billion worth of new transactions that are going to come to the market just from the 2023 elections. So now we look at the credits generally and we think to ourselves, two things have happened since COVID. One is the federal government stepped in and gave an awful lot of money to all kinds of communities. And some of that money still is being spent by them. It sort of explains in one way why the bipartisan infrastructure bill has not actually been drawn on a lot, because the really most municipalities survived well through that crisis of the pandemic, and part of that was that they went into the pandemic being strong. I mean, so you think 3 or 4 years ago there was lots of all the coffers were filled at most municipalities. So now what we're looking at is to see what happens as the rest of the money that they've been given runs out, and what is the real environment for what's going to happen to municipal credits going forward in terms of an operational standpoint.
Who decides whether a bond is insured? Is it the issuer, the underwriter? Who decides that?
So nobody uses us unless we save them money.
Okay.
So when you're issuing your bond, the underwriters on the desk, first the financial advisors who advise the municipalities will say you should consider bond insurance. We'll underwrite the transactions. As the time comes to bring the deal to market, they'll look at it and say, well, how much is BAM charging, and how much are we going to save as a municipality? So that's really the decision that's made right at the time in the market. So when markets are more volatile, bond insurance is used more. When markets are more stable and people have the time, or when volumes are lower, they have more time to take a look at the credits and may say, I'll just take that bond without the insurance.
It's interesting because one thing I'm wondering is about how the election next year, the U.S. presidential election, is going to impact demand for this kind of insurance. I mean, already we're expecting maybe some market volatility with the Fed shifting direction, but how does the election figure into that?
So two things to remember. First of all, people look to the federal government's role in infrastructure, and it's the big stuff. So it's I-95 and the Hoover Dam and big things that are done at a federal level. But 80-90% of what you think of as infrastructure is done at the state and local governmental level. So these things are issued by towns and cities, and that's really the fundamental component. So if you look at what's going to happen in the election next year, it's really a function that resides at the state and local governmental level in terms of how the markets are going to move. And what happens to interest rates overall will affect volume and whether there's a prospect of refinancings as interest rates start to decline, as our prior speaker was advocating.
But I've been told by municipal bond folks that municipalities issue when they need to, not when the market's great. So I mean,
that's true. So think about what's happened. They have a lot of money. Volume's been down because they haven't had to issue. But remember, there's this whole incredibly pent-up demand for rebuilding and creating new projects. And so the things to really watch for, if I was an investor on the other side, is to say, okay, what's going to happen to interest? What does high interest rates do to municipalities? Well, what does it do to mortgage rates? What does it then do to commercial real estate values? What does it do to residential mortgage values? Those are some of the key underpinning issues that move credits good, bad, or indifferent.
Okay, great stuff. Sean, thanks so much for joining us. Sean McCarthy, he's the CEO of Build America. These are the offices we're hanging out in today, so we appreciate you hosting us here. Sean McCarthy, CEO of Build America Mutual. Looking at the markets here, the S&P up 0.3%. The Dow's pretty much unchanged here. NASDAQ up 0.4%. Guess where the movement is, folks, in the stock market today? It is the small cappers. The Russell 2000 up 1.4%. We take note of that. Yields continue to come in. The 10-year Treasury is off about 3 basis points, 4.29%. With our news, down in Washington, D.C. is Amy Marsh.
All right, thank you, Paul. A sixth hostages for prisoner swap is taking place today as a 2-day extension of a ceasefire between Israel and Hamas holds on. Israel is in negotiations to extend the truce that expires today for another 2 days. Meanwhile, Secretary of State Antony Blinken is set to arrive in Israel. He says the Biden administration wants to see that ceasefire extended.
We're working on that every single day, and I expect to take that up tomorrow when I'm in Israel meeting with the government. And again, we have other colleagues in the government who are intensely working on that.
This is Secretary Blinken's third trip to the region since the conflict began last month. Republican George Santos facing the biggest threat yet to his short tenure in Congress. Bloomberg government Congress reporter Jonathan Tamari has more from Washington.
When it comes to Congressman Santos, there always seems to be another twist, another turn in the story. So I guess I wouldn't put anything definitively, but both Democrats and Republicans have advanced fast-track votes to expel him that could come up for votes as soon as this week. There's a sense that maybe Republicans might be more willing to actually go ahead and expel him at this point.
Bloomberg government's Jonathan Tamari reports Santos is vowing not to resign, but he also says he does expect he will be expelled. He would be only the sixth House member ever removed by his fellow members if that vote goes through. At least one person was killed when a U.S. military Osprey aircraft crashed off southern Japan. A Coast Guard official says the cause of the crash is not immediately known. Initial reports said 8 were on board this aircraft. National Public Broadcaster NHK says there were 6 on board. There's been no official word on the other people on board. The Osprey was believed to be heading to Okinawa. That investigation is ongoing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We have green on the screen. Stocks adding to their impressive November rally at this point in the S&P 500. 6 of the 11 major industry groups there are higher right now. You have real estate and financials. They're in the lead. The stocks are following Treasury yields. They're falling. The more policy-reactive 2-year yield right now, that is 6 basis points lower. We're at 4.66. Some of the data that we got today, the economy growing 5.2% in the third quarter, more than was first estimated. And Wells Fargo strategist Eric Nelson, he remains focused on all the data.
I'm really looking at next week's U.S. jobs report. That is the big one, and it's sort of going to tell us, are we going to see an earlier turn to rate cuts, an earlier turn to global slowdown risks, or are we going to get another 180,000, 200,000 number, and we're going to continue to push out this rate cut outlook? And that's sort of where I think the near-term risk is.
And the Fed's Beige Book today, that's going to offer some important clues about demand as well as labor market conditions. We get that later today. Among some of the individual stocks on the move, shares of General Motors, 10% higher on news of a share buyback and also boosting the dividend. As we look at the major averages right now, S&P 500, 12 points higher. That's up 0.3%. We're at 45.67 on the index, and the Dow Jones Industrial Average, 38 points higher. That's up 0.1% at 35,456. The Nasdaq 100 right now, 48 points higher. That is up 0.3%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
All right, JT, thank you so much. We appreciate it. Jennifer Ryan, Paul Sweeney live here in our Bloomberg Interactive Studio, relocated down to the offices of Build America Mutual. We're down at World Financial Center. I think it's 200 Liberty Street. Great part of Manhattan. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. Well, as I've said before, I tell every governor of New Jersey I am basically the largest private creditor to the state of New Jersey with all the municipal bonds I own. So when I call, they pick up the phone. Let's put it that way. Our next guest really knows what's going on in municipal bond business. David Dowden, he's a managing director at Mackay Shields. He's a portfolio manager there. He's been in the muni business for decades. He joins us live here at the Build America Mutual offices. David, thanks for joining us. Talk to us about kind of how you guys at Mackay Shields I guess, approach the municipal bond business. Where do you guys like to play? Where do you see opportunity?
Sure, absolutely. We have a very simple process and thought about munis, which is that the muni market's very broad. It's really 50 little markets, not one national market. It's predominated really by individual investors. Those investors, unfortunately, are usually ill-informed about what's going on in the market. And as a result, this creates a lot of inefficiencies. Those inefficiencies we think we can take advantage of. A lot of people think of munis as an income-only investment. We believe we can generate total return through those inefficiencies. The beauty of that is that's a trade you can do in up and down markets, and it's a trade that is highly repeatable.
So talk a little bit more about the inefficiencies that you see. And one thing I'm really interested in is what this does to flows. I mean, are you seeing the prospect for flows improving next year? Is investment going to tail off? What's your take?
So it's interesting. Munis are a highly what we call technical market, so driven by supply and demand. Flows are a big part of that. And what we tend to see is that the flows into mutual funds are a good proxy for where demand is in the market. And as a result, in munis right now, we have continued to be under the pressure of outflows. Those outflows right now, I think, are being driven more by the desire to do what we call tax swaps on the part of advisors. So they're selling funds that are at losses, and they're going into other funds to capture those losses. Going into next year, our expectation is that once largely the intermediaries of the market, advisors, RIAs, start to have comfort that the Fed has come to an end in its tightening regime, doesn't have to necessarily start easing, but just that we're coming to the end, we'll start to see confidence and the desire to put money back into the market. Bear in mind, we've had interest rates go up over 270 basis points since 21. Interest rates in the muni market are high, and they're quite attractive.
ETFs. Everybody's got an ETF. Makai, you guys have ETFs for the municipal bond space, right? Tell us about the kind of your ETF offerings and kind of what type of market you're trying to, attract.
If you think about the premise behind ETFs, one of the requirements is having a liquid market that's easily tradable and benchmarks that are easily mimicked. That's not the muni market. It is plagued by periods of illiquidity. The benchmark has tens of thousands of issues in it. And historically, we were not in ETFs because they were passive index matching funds. When we had the ability to launch ETFs that were actively managed, we then went into the market. So we don't want to make concessions based on the vehicle that we're investing in. So what we've done is we've created ETFs that allow us to fully demonstrate our belief in relative, value, total return investing in munis.
So can you walk me through a little bit about what the competition is for yourselves in the muni space? You've got the big ETFs, but then what about open-end mutual funds?
We have a business model that manages effectively three sleeves. We have a sub-advisory business to mutual funds. The primary is through our parent, New York Life Investment Management, so the mainstay funds. We are managing, and that would be the ETFs, high net worth money in private funds and then institutional. Our biggest competition, I would say, from a big picture would be today, SMAs, so separate managed accounts. These are platforms where an advisor tells their client, you have $250,000, let's set up a managed portfolio. You'll see the bonds at all times. The flows there have been tremendous. The impact of SMAs have created this dichotomy in the market where the front end of the muni market is exceptionally expensive. Does not offer a lot of value. These types of products are more like laddered portfolios. The second would be other mutual funds, clearly, and then I think certainly you can't ignore the ETFs. The big index ETFs are drawing a lot of flows.
You mentioned earlier that you view the municipal bond market as 50 submarkets, and I take that to mean, I hadn't heard that before. It's kind of interesting. Is that 50 states we're referring to?
Yeah, the number isn't exact.
But roughly.
But based on the fact
so
that
do you guys have to have do you have a state call, or do you have to go every local issuer when you do your analysis? Do you say, boy, anything comes out of Texas, I'm going to take a look at, whereas Michigan I'm not as bullish on. How do you guys think about the submarkets?
We take it from both ends. We have a larger macro view, which will be a function of our economic outlook. It'll be a function of what we think the technicals will be in the muni market, general credit fundamentals. And then as we are building portfolios, we are using our credit research team on a bond-by-bond basis. So everything that goes into a client's portfolio has been reviewed and assessed for its value within the strategy we're employing.
So just to key off that point you just made about looking at credit fundamentals, what's your overall take on those? We've had a lot of talk about a soft landing, a slowdown already on its way.
Yes, municipal bonds in general, municipal finance did very well coming out of COVID. In general, you both continued to pay your taxes, and what we're seeing is that muni finance is in good shape. Probably the biggest headline out there is the concern about commercial real estate, and I think with respect to that, our role for our clients is to differentiate from the headline to what we know are the core financials. And in that respect, we are still very comfortable with certainly the major urban credits that we have exposure to.
David, thank you so much for joining us. David Dowden, he's a managing director at Makai Shields, putting some of that money to work in the municipal bond market, which is the focus of us today here at Makai Shields. Down here at Build America Mutual. S&P 500 up 0.3%. The NASDAQ also up 0.3%. Again, the Russell, keep an eye on the small cappers today, 1.2%. We're going to have more coming up. This is Bloomberg. at some company news right now with Lisa Mateo.
Good morning. General Motors stock hasn't had the best year, and the United Auto Workers strike, well, it didn't help. Well, now the car maker says it's boosting its dividend by 33% and implementing a $10 billion share buyback program to lure investors. Bloomberg's Katie Greifeld says that's not all.
GM also reinstated its 2023 earnings guidance to levels modestly below what it had before the 6-week strike by the UAW cut into profits. GM said that net income will now be between $9.1 to $9.7 billion. Previously, that range was between $9.3 to $10.7 billion. So clearly, that 6-week strike left a mark.
GM right now, they're up about 10.5%. Now, if you're wondering why GM delivered a $10 billion buyback after signing a labor contract that adds about $9.3 billion to expenses, the company's CEO has an answer. Mary Barra spoke earlier on Bloomberg.
Our guidance for next year we've already said that we'll be able to offset that completely with the plan that we already had of a $2 billion cost out perspective. So we did the right thing to recognize our manufacturing team members who have done a great job and continue to build vehicles safely with high quality. And we also thought that we've got to look and make sure that we're balanced across all of our stakeholders, and our owners are very important.
Now, to hear the full conversation, tune into the Bloomberg Surveillance podcast. Now, from the auto industry to real estate, the co-owner of the Chrysler Building is in deep financial trouble after a last-ditch attempt to raise emergency funding failed. Cigna, Austria's largest privately owned real estate company, has filed for insolvency. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Jen Ryan and Paul Sweeney here. Looking at these markets, S&P 500 up 0.4%, the NASDAQ about the same. We're looking at the Russell up 1.3%, so the small cappers outperforming today. Yields coming in yet again. 10-year Treasury down almost 5 basis points, 4.27%. So just extraordinary move down in yields. Oil slightly higher, about up 0.2%, $76.50. Gold having another move higher, $2,042 for gold. So that's had a nice move higher, as Mr. Mike McGlone from Bloomberg Intelligence said it would. Right now, let's head down to Washington, D.C. World and national news with Immerse.
All right, thank you, Paul. Ukrainian President Vladimir Zelensky is calling for a faster buildup of major defensive lines amid Kyiv's stalled counteroffensive and concerns that Russia could attempt to take more territory. Zelensky is urging greater speed and efficiency in building defenses. Russian President Vladimir Putin has been keeping up that military pressure, sending more soldiers to the front despite heavy casualties. The fighting may again expand beyond the east and south of Ukraine if Russia continues to boost its weapons production. Newly published data on life expectancy in the United States show a partial rebound from the worst phase of the coronavirus pandemic. Life expectancy in 2022 rose more than a full year to 77.5 years. That's in data released by the Centers for Disease Control and Prevention. More than 4/5 of this positive jump was attributable to a drop in COVID-19 deaths, but the CDC says that rebound regained less than half the years that were lost to the pandemic. Get ready to dig a little deeper if you want that real Christmas experience. The American Christmas Tree Association says prices this year are up 10%. Blame it on inflation, higher gas prices, transportation costs, and trees that were lost to wildfires. Tyler Stokes is part of the family Christmas tree farm east of downtown San Diego.
7 to 8 foot Doug fir. They're $100. We actually grow our own pine trees as Christmas trees. You could get a nice 7 to 8 foot tree for just $70.
The most popular day to buy a Christmas tree is the first Saturday in December. And family finance expert Elizabeth Kiss says holiday spending can be like an addiction, so it is important to make a list and a budget, but base those decisions on one question.
What is the minimum that we need to have a joyous holiday? For most people, it's way less than what they're actually thinking they need to do.
She says the holidays should focus on creating lasting memories. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jen.
All right, Amy Morris, thank you so much. We appreciate it. Jennifer Ryan, Paul Sweeney with you here. Activist investors are, I guess they're pretty active these days. Activist investor Elliott Investment Management has amassed a $1 billion stake in Phillips 66 and is pushing for 2 board seats to improve the performance of its refineries and boost its stock price. Elliott sent a letter to the Houston-based oil refiners board saying it sees an opportunity to increase Phillips 66 stock prices by about 75% by improving execution, restoring trust with investors, and other measures. That's according to a statement Wednesday. Elliott did not call for ousting Phillips 66 Chief Executive Officer Mark Lashier. So again, I'm seeing more and more, it feels like I'm seeing more and more activist investors out there.
Yeah, you've got to feel like there's some great massive inefficiencies in the market that, speaking for myself, I don't know about you, but I've just not observed. And I think what's interesting about this move into Phillips is that it already comes after Phillips has not had a bad year, a 13% increase in its stock, but still, Paul Singer is saying there's more to be had there.
Yeah, it's interesting. I mean, there's an activist investor, I can't recall who, in the Walt Disney Company, and there you could look at it and say, boy, there are a lot of areas that maybe the market is not valuing these assets correctly. So the question is that also the case here for Phillips 66? I look at the 5-year return, as Matt Miller likes to do using the comp function, COMP. Phillips 66 compounded annual return over the last 5 years, 10.3%. That is below the S&P, about 12.7%, but right in line with the S&P Energy Index at 10.2%. So if you look at the stock price performance over 5 years, it looks like it's done fine. So I don't know what leverage he's going to have here, but it's interesting to see, and it's good for the stock price today, up about 3 or 4%. So activist investors are, in fact, active. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Priya Misra. How about that? She's portfolio manager, J.P. Morgan Asset Management. Get her thoughts on these markets here. And then we get more talk on the public finance market, this time with Gary Hall. He's a president and head of public finance at Siebert Williams Shank & Co. He joins us to discuss the outlook for public financing. And you got to think that there's going to be some demand out there as well. Alex Petrone, she's going to join us. She's the director of fixed income at Rockefeller Asset Management, talking about the fixed income market. So a lot of market talk coming up here. We're going to kick it off this hour with our good friend, John Tucker.
All right, thanks, Paul and Jan. In the S&P 500 right now, we have 7 of the 11 major industry groups. They are higher. Investors are also latched onto more Fed speak today. Bank of Richmond President Thomas Barkin arguing the central bank should keep the option to hike rates still on the table. That has paired some of the earlier gains we're seeing in the risk assets. The Treasury 2-year yields, they are still down 7 basis points to 466. As Sam Stovall at CFRA pushing back against the narrative that Fed officials will be cutting interest rates in the near term.
They are simply reminding us that high for longer, and I don't say higher because my belief is that the Fed is done raising rates at this point, but high for longer because we don't see it cutting in the second quarter as the street does. We think they'll wait until the third quarter.
And right now the S&P 500 16 points higher, up 0.4%, 4570 on the index. The Dow Jones Industrial Average is up 66 points. The NASDAQ 100, that's up 69 points, up 0.4%. As you point out, Paul, the small caps having a great day. Russell 2000 up 1.3%. And some of the individual shares on the move right now. Meta Platforms, that's putting a drag on the indexes. That is down 1.6%. And Foot Locker shares up close to 17%, raising its full-year forecast. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jen and Paul.
All right, John Tucker, thank you so much. We appreciate it. Jennifer Ryan, Paul Sweeney, we're live. Today we're down at the offices of Build America Mutual. That is down in the Lower Manhattan at World Financial Center. We're broadcasting live. We're also streaming the video thing on YouTube. So head over to youtube.com and search Bloomberg Radio. And Bloomberg is now in your dashboard with Apple CarPlay and Android Auto. Tom Keene is all over this. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, first of all, it's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers. So how about that? All right, looking at these markets here, a little bit of green on the screen here as we've been reporting all morning. The S&P up 0.4. Let's go under the hood here with Nora Melinda. She covers the markets for Bloomberg News. Nora, what are you looking at?
So kicking it off with General Motors, it's jumping for its biggest gain since April of 2020. That's as much as 12% this morning. After saying that it would hike its dividend by 33% and repurchase $10 billion of share. Now that marks its biggest ever buyback plan on record. And on top of that, investors are really elated by the fact that the automaker said it would reinstate its 2023 earnings guidance to levels that were modestly below what it gave before the 6-week United Auto Workers strike that cut into the company's profits. That new guidance is really much better than expected for most Wall Street analysts.
Can you talk a little bit about what your sense is from investors on this pop in the stock today on the buyback? Is that pop something that's going to be long lasting, or is this just sort of a one-off?
I mean, I think it really is surging today, and people are very, very much so optimistic. So I think the sentiment is really that we'll have to wait and see, but it is very welcome news for the company. But I've got another stock for you here this morning.
Hey, Nora.
HP Enterprise.
Yeah, just looking at. Tell me about what's happening. All right, go ahead, Nora.
HP Enterprise, that's not to be confused with, we've got HP and HPE. So HP is the printer and PC side of the company, while HPE deals with enterprise products and services. Now, HPE is advancing for its biggest gain in a year, up as much as 8.9%. And HPE reported its fourth quarter results and gave an outlook that showed strength in AI, which we all know is very topical this year. But HPE executives were optimistic about AI demand, but characterized enterprise demand as soft but stable.
All right, Nora, thank you so much. We appreciate that. As always, Nora Melinda, she's a Bloomberg Equities reporter, giving us the latest on some of the stock movements in the market here today in what is a positive up day in the markets. Let's go right now to our next guest, Priya Misra, portfolio manager, JP Morgan Asset Management, joins us here via Zoom. Nora, I mean, Priya, what do you make of what's happened in the rate market just in the last, I'm going to say just a month of November? Boy, we've had, most of the yield curve was sitting right around 5%, and now we got the 10-year, at 4.25%. That's some move. What do you make of it?
Sure. It's been very volatile, pretty vicious. So I think if you go back a little bit, September, October, we saw a pretty big move higher in rates, right? From that 4.25% all the way up to 5%. I think it was a perfect storm of stronger data, hawkish Fed, more supply. I actually think the buyers got nervous. What we've seen over the last month is a reversal of all of this. So you had the U.S. Treasury saying, well, maybe not as much long in supply. You had economic data, which is slowing. I think we're going to debate for a while whether soft landing or hard landing, but it's clear that the economic data is moderating, both inflation as well as growth. And then importantly, in the last few weeks, we've heard from the Fed, and I would say in the last 2 days, we've heard from the Fed very clearly that the hiking cycle seems to be behind us. We're end of cycle. And I think the market's now running ahead with what's next. When do the cuts start to come? So I think that the move in rates, it was a technical-led move. I think beyond 440 on 10s, that move was very fast, up to 5. I think we've retraced it. Now I think we're going to settle into a range, 3 3/4, or maybe 4% to 4.5%, or 3 3/4 to 4.25%. I think that's the 10-year range, as long as we're in a soft landing. If things deteriorate some more, and we're talking about the Fed having to cut a lot sooner or a lot more than what's priced in, and I think there's a decent chance of that. At that point, then the 10-year could absolutely go closer to 3%. But I think that the data right now suggests more soft landing, and I think that's essentially what has gotten priced in. So it's been a very quick move because it was a very quick move up to 5%. I think now we can sort of consolidate in this, close to 4% range.
I want to ask you about the speed of this move. I mean, it really is breathtaking. And one question that niggles at me is, what's the risk that people have got it wrong here?
So I think there are a few assumptions in the market right now. Things are slowing, and I think the assumption is that we're slowing to trend and we won't slow any further. I think it's an open question. There are cracks we're seeing. These cracks could absolutely deepen. So when you talk about what could go wrong, well, things could slow into a recession. And that's why I'm looking at every data point and digging into all of the details. I think aggregate data is useful, but we have to look at the distribution, because I think, when the cost of capital is high, there's a big difference between the haves and the have-nots. And I think it's going to be important to look at all of that. So I think that could be one assumption. The other assumption in the last few days has become when does the Fed start to cut? I think the soft landing predicates on the Fed easing soon. And the assumption there is that inflation has declined, and it's going to decline to 2% quickly. I think that could be a big assumption. That could be that the actual data could show that inflation may be stalling. I think the last mile of inflation is, there's some Fed rhetoric that it could be harder. And so I think even if things start to slow down and inflation stalls at 2.5 or 2 3/4, and the Fed says, well, we're not at target, and so we can't cut rates preemptively, I think that could be an assumption which puts the soft landing narrative at risk. So there's a lot. And then if financial conditions ease a lot, which they've been easing in the last few weeks, you could have the Fed saying, well, we didn't want them to tighten too much, but now they're easing too much. So I think this dance between financial conditions and the Fed, that also can go the other way if the Fed thinks the easing is too much. So it's a bit tenuous. I do think we're in the midst of the FOMO year-end rally. But I think as we start next year, we have to, so your question's well put, because I think a lot of these assumptions could be challenged.
So Priya, on the yield curve here, where do you see the most opportunity?
So I have to say, as much as I'd like to position for a steepener, and we have a bit of a steepening bias in our portfolio, I think it does depend on the Fed starting to cut rates soon. So I think the curve actually need not do a whole lot in the near term. I think duration might be a better trade than the curve. I think longer term, the curve should steepen as the Fed cuts rates. You know, you should have a more normal upward sloping yield curve. But we're not close to the Fed target on inflation. And I think they're going to be reluctant to cut rates soon. So I think the steepening is going to run out of steam. It steepened a lot in the last couple of days. I think if we have key data points coming up in a Fed meeting, so the next few weeks could steepen, then I think we'll stall out. And I would prefer being long duration here. I think 10s north of 4% are cheap. Real rates, 10-year real rates above 2%. I would argue that's a better risk reward than positioning for the curve one way or the other. But longer term, I think it should steepen.
You know, we're looking at some price data coming out tomorrow, and I wondered if you could talk a little bit about what your own expectations are, and then what are the risks that inflation doesn't come down as quickly as the Fed would like?
Sure. So, I mean, when I decompose the move in inflation higher, there were supply issues and there were demand issues. The supply ones, I have a lot of conviction. Those issues have largely been resolved. Time, I mean, people spend a lot of time thinking about supply chain issues. And so I think that the base effect, commodities are coming off. And so I think we have conviction that inflation's coming down from the supply side. Even labor force participation, which is a labor market supply technical, has did move positive. On the demand side, I think there has been some improvement on the demand side. Growth is absolutely slowing. Fourth quarter is probably in the 1% type GDP range, and that should put somewhat downward pressure on inflation. But there are other components. Housing, it's a well-documented lag in terms of how quickly housing inflation can come down, and the labor market is still tight. So I think while I do expect over the next year or two inflation to head closer to 2%, I think the speed in which it has declined this year, we might be a bit disappointed. To your question on what's the risk, I think the risk might be not so much for tomorrow. I think we'll probably see another decline. But I would say the risks are a little asymmetric. The market is not going to like any upside risk to inflation, because that puts this whole question of the Fed easing, making policy less restrictive. It throws that into question, because the Fed is very clear. They want inflation close to 2%. We're not at 2%. So any upside risk to inflation, I think, will not be taken kindly by any market, frankly. And I think with a tight labor market, with wages still above levels that would be consistent with 2% inflation, I think the risks are still somewhat to the upside, more from a demand, rather than a supply perspective on inflation.
And so, Priya, you mentioned the labor market's still tight here. We have an unemployment rate of 3.9%. Where do you think the Fed would be comfortable seeing that go?
So the Fed's forecast for inflation at the end of next year is 4.1, which is actually very close to NARU, or their estimate of the long-run level of unemployment. But you asked about comfort, which I think what you're trying to get at is at what level do they get nervous about a recession or too much of a slowdown and they start to cut rates. And I would say it needs to be somewhat higher than that 4.1%. I think closer to 5% would make them uncomfortable, because that's far off away from NARU. It would put downward pressure on inflation, and they certainly don't want to overshoot on inflation below 2%. And so, I think if we get north of 4.5%, you'll start to see some nervousness building at the Fed that the labor market may be slowing faster. But again, I would look at details. If it's a rise in the unemployment rate because of participation, that's actually good news. That means people are coming back to the labor force. If it is a rise in the unemployment rate because payroll growth is slowing and we're running negative payroll growth, I think that, a number in that 4.5 to 5 range, I think is something the Fed would be concerned. And I think then they might be more open to cutting rates.
It's interesting to talk a little bit more about the labor market because it's been through such an enormous ride this year, not just the persistently low levels of unemployment, but we're seeing so much union activity amongst labor groups to look for higher wages, winning those fights, as Nora was pointing out in her talk about GM earlier. And, I wonder if these higher prices are really just going to start to get entrenched, how quickly, how easy it'll be to, convince people that the inflation is really going to be headed in the right direction when we've seen so many victories in the labor market.
Right. I think when the labor market is tight, you start to see wage pressure. We saw it in certain industries in the last 2 years. You're seeing it in others, as you brought up through the union side. I will say as inflation comes down, real wage growth for the household sector has improved tremendously this year. In fact, I think that's behind why the consumer's been that resilient, that wages were not able to keep up with inflation this year, and they have. And in fact, depending on your consumption basket, you could argue that wages have been higher than inflation. But I think you hit the key point. I think for the Fed to have comfort that the inflation genie is back in the bottle and 2% is where we're headed, they'll want to see wage inflation come back down. So as important as tomorrow's number is going to be on PCE, I think that wage number a week from now, average hourly earnings or the Atlanta Fed wage tracker, we look at ECI, we look at many measures of wages. And unless you see that heading closer to, I would say, ECI in the 3% year over year range, which we're above that, it's hard to see how you get inflation back down. And I do think the Fed, having lost some credibility on inflation, they're going to want to make sure that they're getting all signs that inflation's heading back to 2% before they can sort of bless the market pricing of rate cuts. So yeah, wages is going to be absolutely key, and more union activity or a continued strong labor market will put that, we'll have that upside risk to inflation from the labor market side. I think then that can just last longer. So it's absolutely critical.
All right, Priya Misra, thank you so much for joining us. We always appreciate getting your thoughts, your perspective. Priya Misra, portfolio manager at JP Morgan Asset Management. And we are going to get some more economic data tomorrow that's going to be certainly front and center for the market. PCE deflator, the headline, 0.1%. That's kind of the consensus. That's below the 0.4% last period, so trending in the right direction. The core, PCE core deflator month-on-month at 0.2%. Again, that's less than the 0.3. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning. A strong Thanksgiving week helped Foot Locker raise its full-year forecast. We get more on that from Bloomberg's Abigail Doolittle.
But in this particular quarter, the third quarter, they did beat comp sales, putting up a comp sales of minus 8%, down 8% versus the estimate of down almost 10%. Adjusted earnings of 37 cents, beat by about 37%.
Foot Locker looking pretty good, up about 15% right now. Now, shares of Alibaba, not so much. They're moving lower. They're down about 3% right now. And this is after Jack Ma sent an internal memo urging employees to, quote, correct course. Bloomberg's Ed Ludlow explains why this is a big deal.
Jack Ma hasn't really been operationally involved in Alibaba since 2020. The stock is way off its 2020 pandemic high. We know about the plan to restructure into 6 individual units. That has largely been scrapped with the cancelling of the plan to spin off the cloud business. The most notable part of it, according to Bloomberg Intelligence, was Jack Ma noting the competition from Pinduoduo, the owner of Temu in the e-commerce space, and basically congratulating them for their performance.
Now, Ludlow says the comments put a lot of pressure on the 2 current co-CEOs as Alibaba has underperformed year to date. Now, Ed also mentioned Temu, and it looks like the Chinese e-commerce giant is doing pretty well. The Wall Street Journal reports the company has committed to buying multiple ad units during the Super Bowl again. It's a big investment for its parent company, PDD Holdings, because prices for 30 seconds of ad time during the big game, well, it can range anywhere from roughly $6 million to as high as $7.2 million. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Yields are lower, stocks are higher, with the idea of Fed rate cuts coming sooner than later, even with an economy that appears to be running on all cylinders. Third quarter GDP today revised upward to 5.2%. We also had a downward revision to the core inflation index. And then the VIX, Wall Street's fear gauge, remains at pretty low levels. It has an inverse relationship with the S&P 500. Right now, the S&P 500 pairing some of the earlier gains, up just 3 points right now, 45.58. The Dow up 15 points, 35,432. The NASDAQ 100, 5 points higher right now. And the two-year yield, 7 basis points lower. That is at 465. Some of the individual shares on the move. NetApp up 16%. So that makes it the best performing stock in the S&P 500. The data storage company boosting its full-year adjusted earnings per share forecast. And Jen and Paul, at the risk of sounding stupid, I did have to put this question to economics correspondent Mike McKee. So today's core PC index, price index, or tomorrow's PCE core deflator, what is more important? So the response is tomorrow's. Today is a quarterly average for July, August, and September, and tomorrow's going to be new data for October. So there you go. Put that in your pipe and smoke it.
There you go. John Tucker, thank you so much. We appreciate it. As always, Jennifer Ryan, Paul Sweeney. We are live here at the Build America Mutual offices, Lower Manhattan, World Financial Center. And we're also streaming live on YouTube. So head over to YouTube. That's the internet for those of you who don't know, youtube.com. Search Bloomberg Radio. Let's talk about the public finance market, getting stuff done, getting deals done. And for that, we're joined by Gary Hall. He's president and head of public finance at Siebert Williams Shank & Company, which is an investment bank. And he is based in San Francisco, but he just got off the red eye, so he's here in New York. We appreciate that. Gary, talk to us about the state of the municipal bond underwriting market. How has this year been in terms of issuance versus maybe a typical year?
Yeah, well, higher interest rates have actually caused a decline in our market volume. Obviously, if you have low interest rates, there's a large amount of refinancings done, right? And so that volume has sort of gone away. In addition, we're still waiting for the largesse of the Infrastructure Investment Act to see benefits in our market, where we start to see state and local governments start to produce their share and their match through bond issuance. We're still in the embryonic stages of the allocation of that legislation. So to date, we still have sort of a depressed volume.
So can you talk us through a little bit about what your expectations are for January? Is there still going to be a little bit of depression overhanging the issuance market, or do you feel like there could be some improvement?
You know, I would tell you, I'm pretty bullish on the direction that we're going for two reasons. Number one, you still see a lot of public support for infrastructure improvements. I'll give you an example. In Texas, which is viewed as a more conservative state, they just authorized $20 billion of issuance for K through 12 in a state like Texas, right? So that support tells me that we're going to have a lot more investment in the area. The other thing, as I mentioned before, we still have this pent-up demand for infrastructure needed in the country. And irrespective to where rates are or the cost of construction, folks are going to have to make these improvements.
So I guess one of our guests today was saying the municipalities, they still have a lot of money sloshing around from all the stimulus from the pandemic. How do you see that playing out in terms of their needs for capital going forward?
Yeah, I think that's true, but a lot of that money is not specified for capital needs, right?
Okay.
And the other thing that people don't realize, just like we're all getting readjusted post-pandemic and being back in the office and getting fully up to speed, our governments are doing this as well. And so just drinking water through a fire hose, through all the different things that they're trying to manage, doing infrastructure and making infrastructure investments, it's important, but it's something that they're getting around to address the other issues that are affecting their local citizenry.
You know, you were talking about the allocations from the Inflation Fund, the Inflation Act, and I wondered if you could talk about the longevity of federal support for investment. We've got a presidential election coming up next year.
Well, two things. One, I would say that, you know, a lot of the money that comes through this Infrastructure Act is actually flowing through the states, right? And so there's a lot of control on the timing of these projects through the states. And that was purposely done in the legislation. The other thing that's really important is that we typically have federal money being dispersed based on some formula. This requires a lot of completion of applications for competitive grants, which requires a lot of interagency, multi-governments coming together to show impact for these improvements. That's a tough thing to do in a lot of the localities around the country, especially given a lot of the political strife. And so that's one of the reasons that this has been slow off the start. That said, it's a presidential year, and folks want to see benefits of this legislation. So I'm predicting that we'll start to see more projects actually being shovel-ready. Once these projects are actually being implemented and we see the improvements, I think that's when we start to see more sustainable investment in our infrastructure around the country.
How does a municipal investment banker go out and pitch? When I was in corporate finance, I had a list of clients, and I'm just in their face all the time, throwing ideas at them, throwing ideas. How do you guys do it? Are there mandates that come down? How's that work?
Oh, that's a great question. And actually, these market conditions have actually impacted that. When we're doing analysis for refundings, we can be at our desk. And as long as we know the debt portfolios of our clients, we can identify deals, right? But when you start to try to figure out the timing of new money projects, you have to be in front of clients. You have to be in city council meetings and board meetings to know when those project timings. And so we're spending a lot of shoe leather getting in front of our clients to find those opportunities. And that's a little tougher. The other thing is the regulatory environment, right? In the past, we could just provide ideas to our clients, and they had their own autonomy to choose what they want. Now, we're restrained on how we can pitch ideas. We've got to be sort of provide market information and not tailored solutions unless we have exceptions. So that's limited the lack of the actual engagement we can have with our clients.
Interesting.
So where do you see the biggest opportunities, broadly speaking?
Well, for us, our firm we've been sort of counterintuitive. So we've made huge investments over the last year in 3 areas. We feel that higher ed is still going to be a burgeoning place as people are coming back to the classroom and infrastructure needs are correlated with that. We're going to see major investments in that area. The K through 12 space, we see it in Texas, we're going to see it in California. As we start to have population migration in different places, we're starting to see schools making huge improvements in that area. And the other areas are those core infrastructure that we know we have to change, and that's transmission systems and water supply systems, both because they're aging and in need of repair, and also to adapt to climate change.
So do you guys target states like the states that are growing in population, like a Florida or Texas, and maybe not so much a Rust Belt state, or how do you guys approach that?
Well, market conditions don't allow you to boil the ocean.
Yep.
And so you have to be somewhat targeted. We've got 19 offices around the country.
Okay.
And having those spokes in those communities allows us to know where the deal flow will come.
You've got, of your 19 offices, what provided the biggest surprise for you over the pandemic? I mean, you mentioned you had to expend a lot of shoe leather to get projects going, so I imagine that might have been quite tough, but where was the big win for you there?
I would say Texas. I mean, you think of it being a conservative state, physically conservative, and the fact they spent so much money on K through 12 capital improvements, that's been mind-boggling to us. And so we're still working hard to capture that market share. It's tough because it's so dispersed, and there are 3-4 different economies within Texas. But that said, we're really bullish on the opportunities in Texas.
How do you think? What's your outlook for 2024 in terms of that issuance number? I guess you said we were like 320 or so this year, and the typical year is 400. Do you think the market's going to be a little bit better?
Our volume is comprised of two components. One, new money spent, new capital projects, right? And as our state and local issuers try to tap these federal dollars and need their local match, that's going to go up. Refundings is another component. And even though interest rates are high, we found this untapped market volume this year through the tender market process that allows
that.
Literally, our issuers are allowed to ask investors to buy back bonds, so they can achieve savings, right? And it was something that was rarely used in the past. We've got over 50 billion, close to 60 billion of issuance of that this year, and I think that sort of muscle is sort of baked into our market now, and we'll see that going forward.
Real quick, where do you see demand for all these new issues coming from?
Well, as we are now seeing a little bit more juice on the front end of the curve, true mom and pop retail is coming back into our market, which is very, very, very welcome. We still have robust bond funds and other investment segments that are there. And as long as we have the tax system that we have in this country, people will be seeking relief.
30 seconds, Gary. Just tell us about your firm a little bit. I had not heard about it.
Oh, so we are the largest minority-owned investment bank in the country, a cornerstone in public finance, which we're going to be forever, and along with the capital markets and corporate as well as an asset management firm.
Awesome. Gary Hall, thank you so much for joining us. Gary Hall is the president, and as soon as I can get this little screen off of my thing here, president and head of public finance infrastructure for the firm Siebert Williams, Shank and Company, focusing on the municipal bond market. Again, issuance down this year. I guess that makes sense. We had interest rates rising 500 basis points. Who needs to go out and raise debt unless you have to? But in public finance world, as Gary was just mentioning, there's lots of sources of demand for new public funding. So keep an eye on that in the municipal bond market. I love municipal bonds in my portfolio. S&P 500 doing absolutely nothing, unched on the day. I'll call that out for Lisa Abramowitz. Same for the Dow. NASDAQ off about 0.1 of 1%. So we're giving back some of the gains we had earlier in the day. Why? I don't know. Russell 2000, that's up 0.8%. So we are seeing a little broadening out of the performance there in the equity markets. Yields coming in yet again, the 10-year Treasury, 4.28%. With our news down in Washington, D.C., here's Amy Mars.
All right, thank you, Paula. Wall Street banking boss is urging Democrats to back a Republican candidate for president. Bloomberg's Steve Rappaport explains.
If Democrats want to keep Donald Trump from reclaiming the White House, Jamie Dimon suggests they vote for Nikki Haley. Speaking at the New York Times DealBook Summit, the J.P. Morgan Chase CEO said even liberals need to be on board with getting a choice on the Republican side that might be better than Trump. Dimon adding he will work with whoever ends up winning in 2024. Haley won an endorsement Tuesday from a political network tied to billionaire Charles Koch, but the former UN ambassador still trails Trump and Florida Governor Ron DeSantis in polls. In New York, Steve Rappaport, Bloomberg Radio.
Consumer Report says electric vehicles are proving to be far less reliable on average compared to gas-powered cars, trucks, and SUVs. Bloomberg's Karen Moscow has more.
Consumer Reports' latest survey found EVs from the 2021 through 2023 model years encountered nearly 80% more problems than vehicles propelled by internal combustion engines. EV owners most frequently reported troubles with battery and charging systems, as well as flaws in how the vehicle's body panels and interior parts fit together. Consumer Reports noted that EV manufacturers are still learning to construct completely new power systems and suggested overall reliability of electric vehicles should improve in the future. Karen Moscow, Bloomberg Radio.
A hearing on drug shortages has been slated for December 5th by the Senate Finance Committee. More than 300 medicines are in shortage, from antibiotics to cancer drugs to ADHD medicines. That's according to the University of Utah's Drug Information Service. There are no specific nor credible threats as pro-Palestinian supporters plan to crash tonight's Rockefeller Center tree lighting. The group Within Our Lifetime says it wants to flood the event for Gaza, calling for mobilization, not celebration. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. More Fed speak today, and the S&P 500 as a result, coming off the session highs. Fed Bank of Richmond President Tom Barkin arguing the central bank should leave the door open to more rate hikes. Mega cap stocks, they're mixed. NVIDIA Corporation, right now that's leading gains in the chip makers. That is, let me get you a quote here, up about 0.5%. And Microsoft, those shares are sliding right now, down 1.3%. Also, along with Alphabet, down 1.1%. Sandra Horsfield is an economist with Investec. She's encouraged by falling inflation and the labor market in the U.S.
When inflation is lower, wage growth does mean more real spending power. I think that's the real question going forward. So we're not that pessimistic for the time being. So perhaps recession will be avoided. But as many say, it is a fine line and there are no guarantees.
The S&P 500 4 points higher, up 0.1%. 45.59 in the index right now. The Dow Jones Industrial Average 29 points higher. NASDAQ 100 9 points higher. The Russell 2000, these are the small caps, remember, that is up 1% right now. You're hungry for data, so are we. This afternoon, we're going to look at the Fed's Beige Book, and investors will be latched onto tomorrow's PCE core deflator. That's going to be new data for the month of October. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Jan.
6, 7, 9,
so much. We
10.
Appreciate it. Just an outstanding Bloomberg Business Flash, as we've become used to. So we are here at the Build America Mutual HQ down in Lower Manhattan. Jennifer Ryan, Paul Sweeney here with you. We're also streaming live on that internet thing. I think it's Bloomberg TV, the kids call it. So we're talking a lot of focus here on the municipal bond market. And boy, we got a great guest coming up. Tremendous educational pedigree. She went to some place up in Cambridge for college. I can't remember the name, but she is a graduate of the Lawrenceville School, so a fellow alum of Lawrenceville, so we appreciate Alex Petrone joining us, a director of fixed income at Rockefeller Asset Management. She's been on the street a long time, so knows this municipal bond market. I want to start with volatility. I don't know the day-to-day trading in municipal bond market like I know the treasury market, but the treasury market is just all over the place. Yeah. I'd never seen swings like this. I mean, and I attribute it to, my former fixed income, like I worked at Salomon Brothers, there'd be like 500 people on the floor trading government bonds. Now there's like 3, So I blame the investment banks who are because of the regulations. But talk to us about the volatility in the municipal bond market. What do you guys have to deal with day to day as investors?
Yeah, absolutely, Paul. Great question. And, shout out to Lawrenceville alums. Yeah. Great school as well. Love that. Liquidity has been much more challenged in today's environment, and it's really across the board. It's looking at treasuries, it's looking at corporates, and municipals are not unscathed there. So we've seen much more pronounced bouts of municipal market illiquidity and volatility in 2022. And the key difference today versus when I started is the dealer desk community has shrunk in a number of ways, whether it's reducing headcounts, whether it is firms that are shutting down their desks or ongoing M&A in the space, or just simply put, the amount of capital that's committed to being long muni risk today is lower than it was pre-GFC. That number over the last year has averaged, call it 12 billion or so. We've had moments this year where it's about 7 billion. We've had moments where it's closer to 9. In that environment where the municipal market has grown to 4 trillion and you have tremendous rate volatility, that at times might spook retail investors and lead to an outflow cycle out of, call it, open-end funds. At that moment in time, when you have a number of investors that are looking for liquidity and really limited balance sheets in the dealer community, it creates more pronounced volatility. Add in factors there such as insurance and bank capital that previously might have been a backstop for the municipal market in these periods of volatility. The muni to treasury ratios that you have to start to hit these days becomes a little bit higher because banks are not long as much of that risk. We saw that post SVB where banks started to really reduce their commitment to being long munis. And so from our perspective, it creates a tremendous amount of volatility. a tremendous amount of opportunity. It's really kind of interesting when you look at how both predictable the municipal market can be in periods of liquidity, but also how unpredictable. And what we're seeing right now is actually a shift in that trend. Right now, if you look at performance over the course of November, munis have outperformed. The dealer community has been stepping up and going long risk here, and you get that seasonality every single year in which calendar starts to dry up. Rates have stabilized a bit, which has really helped to influence demand for risk. There's a view that maybe we're nearing the end of this rate hiking cycle. And now we've gotten to this point where it seems that liquidity is quite present at this moment in time. We think that that lasts through January. But from our perspective, the message is simple. There will be periods of illiquidity. There will be elevated volatility. That is an opportunity for investors.
If you could talk a little bit more about the opportunity, where broadly speaking do you see this? And I'm not just talking about, what sorts of issuers, what sorts of states or municipalities, but also on a relative fixed income basis.
Yeah, absolutely. So when we look for opportunities, we think about a couple of key things. We look at the yield curve dynamics. Where are people net sellers? Where is their best value? If you look at the shape of the municipal yield curve today, it is really interesting. I think this plays into some of what we've seen in the rise of separately managed accounts, maybe the decline in demand from open-end funds. The municipal yield curve, the shape of it looks like a soup ladle. That's what many of my colleagues like to call it. I typically lean towards the Big Dipper. But what you see quite simply is the curve is inverted. You get tremendous flatness in the curve from 3 to 10 years, and then it steepens back out a little farther out the curve. Well, what's driving that? That is certainly the rise in separately managed accounts. We've seen over the course of my career the democratization of SMAs. When I started in the business at Morgan Stanley, it was brokerage, it was buying and selling bonds direct out of your inventory at the banks. So that's not the case today. Fees are much lower, minimums are much lower, ladders are much more prevalent within the market.
That's what I have.
There you go. We should talk about this maybe after.
I tell every governor of New Jersey I'm the largest creditor, private creditor, so you better be nice to me.
Perfect. Well, they're doing much better these past few years, so that's wonderful. But what it's really meant from our perspective is it creates the opportunity for active managers to really be thoughtful around the yield curve and trying to maximize around steepness, around yield, around income. On the flip side, it also means that issuers are probably going to try to think through how can we best issue in the market today. And maybe that means an increase, and we've seen some of that in the last year or two, of the 0 to 5 year issuance space, as well as thinking about 10 to 15 years as trying to optimize both if you're the issuer, but also if you're the investor.
What are the sectors that you guys like these days?
Yeah, so when we think about credit risk, we need to be mindful of the fact that credit risks are forming here.
Okay.
We are heading into a period of a slowdown. For me, I think we go back to the muni playbook. And what is the muni playbook through a cycle? As you start to see economic contraction, you want to stick to high quality, large GOs that have managed through, have rainy day reserve funds that have built up through this. Now, we know that 16 states are already signaling that their economies are contraction.
Really?
New York is one of them.
Oh boy.
Yes. Midwest, there's a number of states. New Jersey seems to be okay for now. So we'll keep a close eye on that.
Big pharma.
But what it tells us quite simply is we know a slowdown is coming. Essential service revenue bonds, right? How many times have we talked about water, sewer, elects through these points in the cycle, trying to stay to areas where you have steady revenue streams, where you have the ability to raise rates as needed. We know that housing is well supported here, so being mindful that in large cities, in large states, they should fare well, albeit with some structural imbalances as rising employment costs certainly are putting pressure on budgets today.
All right, great stuff. Alex Petrone, thank you so much for joining us. Alex Petrone, Director of Fixed Income at Rockefeller Asset Management, a proud graduate of the Lawrenceville School in Lawrenceville, New Jersey, and I can't remember where she went to college. I think that was probably pretty good, too, so we appreciate getting that. Looking at these markets here, not much happening, kids. S&P 500 up about 0.1%. Same for NASDAQ as well. Looking at the yield curve, 2-year Treasury off about 7 basis points, 4.66. The 10-year off about 2.5 basis points, 4.29%. Remember, we were at 5% just like a cup of coffee ago. Those days are gone. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning. GameStop shares, well, they're on the rise, and this is as traders bet the meme stock will rally over the next 2 weeks. We get details on that from Bloomberg's Emily Grafeo.
The company has earnings next week, and there was a news article on Bloomberg actually that traders are piling into call options, which are bullish options for GameStop that would pay off if the stock price basically doubles before the earnings. So maybe a little bit of momentum and speculation here related to the options market.
Now, there is momentum. GameStop right now up about 20%. And a victory for Starbucks with the National Labor Relations Board. Bloomberg's Gina Cervetti has that story.
Starbucks did follow federal labor law when a manager at a Southern California store spoke about unionizing during employee performance reviews. That ruling comes from the National Labor Relations Board. It affirmed an earlier decision dismissing allegations that Starbucks illegally forced a worker to listen to an anti-union argument and forbid 2 others from discussing the union at work.
Starbucks right now down about 0.5%. And the Union for American Airlines flight attendants want to call a strike at the end of the year, but the National Mediation Board isn't having it. The group has directed American and the Association of Professional Flight Attendants to continue negotiations. Shares of American Airlines right now, they're up about 1.5%. And you can add Amazon to the list of companies releasing an AI chatbot. Amazon Web Services is rolling out Amazon Q. It's designed to help corporate customers search for information, write code, and review business metrics. Amazon down just a fraction. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
The S&P's up about 0.1%, pretty much across the board. Looking at the Dow and the Nasdaq, the Russell up about a solid 1%. So still some outperformance in the small cap stocks, which is good to see for a lot of market technicians. Yields down about 2 basis points, 4.30. We were at 4.24 earlier in the day, so but still lower yields out there. WTI crude oil a solid 1% higher, $77.25 there for WTI, and crude higher as well, $2,040 an ounce on gold. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Marce.
All right, thank you, Paul. Ukrainian President Vladimir Zelensky is calling for a faster buildup of major defensive lines as his country's war with Russia heads into another hard winter. Bloomberg's Alexander Kudrytsky has more on this from our Warsaw Bureau.
Looks like Zelensky will try to avoid the situation of the early days and months of the war when Russia was able to capture large swaths of Ukrainian territory. He would like to prevent this from happening as Ukrainian troops are more or less stuck on the front line because they face the equally entrenched and thick defense lines on the Russian side.
That's Bloomberg's Alex Kudrytsky covering the war in Ukraine from our bureau in Warsaw. The rules for political and social issue advertising on Facebook and Instagram during the 2024 presidential race will look a lot like past election cycles. Meta says it will block new political ads a week before U.S. voters go to the polls in November and will require advertisers to disclose when political or social issue ads had been created or altered by artificial intelligence. Get ready to dig a little deeper if you want that real Christmas experience. The American Christmas Tree Association says prices this year are up 10%. You can blame it on inflation, higher gas prices, transportation costs, and trees lost to wildfires.
7 to 8 foot Doug fir, they're $100. We actually grow our own pine trees as Christmas trees. You could get a nice 7 to 8 foot tree for just $70.
Tyler Stokes is part of the family Christmas tree farm east of downtown San Diego. He says the most popular day to buy a Christmas tree is the first Saturday in December. Family finance expert Elizabeth Kiss says holiday spending can be like an addiction, so it's important to make a list and plan a budget, and most importantly, base those decisions on one question.
Between 3 and 4% above last year's holiday season.
Well, she says the holidays should focus on creating lasting memories. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jennifer.
Amy Marce, thank you so much. We appreciate that. Jennifer, Ryan, Paul Sweeney with you. Some news crossing the Bloomberg terminal. Israel and Hamas agree to extend truce for 2 more days and to free more hostages and prisoners. That's according to the Associated Press. So we will have more reporting on that. Jennifer, I'm not sure if you're aware of this, but one of my bucket list things to do is to get a ride on one of those big global cargo ships. You know, the ones that got like the containers stacked. They just look so cool to me. But there's a problem out there with that in that world of the economy. Unprecedented congestion at the Panama Canal could ultimately result in delays at Egypt's Suez Canal, potentially affecting cargoes of liquefied natural gas. That's according to a top official at a Greek shipping company, which is in Greek, so I can't really read it. So a lack of rainfall has dried up Key Lake at the Panama Canal, hobbling shipments through one of the world's most important waterways. The resulting delays have already upended global commerce, forcing some ships to take the long journey around South America. Isn't that cool?
That is cool. And who knew that what was happening in Panama gets felt over in Suez?
Yep. And there's been other stories that if you're stuck out there and you're in queue for the Panama Canal, you can pay like a special premium to jump in line. And so now some shippers are saying it's worth it because the delay is so long. But the premiums for those payments are going sky high.
We got to get a Bloomberg function for those premiums.
I know. Well, we do have the mapping function,
Yeah.
and you can see all the ships. iMap Go, and then you can click on the shipping, and it'll show you where all the registered ships are around the world, and you can see the big backup at Suez and the Panama.
That is so cool.
It is very cool. We used that function a lot when the California ports were closed down. You can see all the ships off the port of Los Angeles and Long Beach. So another one of the great functions on the Bloomberg terminal. Who thought of that? I have no idea. More coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to get a look at some of the macro data that's been crossing the Bloomberg terminal. We got some more tomorrow. We're going to check all that out with Michael McKee, international economics and policy correspondent with Bloomberg News. He's going to join us. And then we're going to round table some municipal bond talk. Where's Matt Miller when you need him? He loves municipal bond talk. We're going to do it here at the Build American Mutual headquarters with Eric Kazatsky, senior municipal strategist at Bloomberg Intelligence, and Chris Brigatti, formerly of Valley National Bank, talk about the municipal bond market, how that market's trading here. Eric Russell, treasurer of the state of Connecticut, is going to join us to talk about some of the bonds that and the financing needs that the state of Connecticut is pursuing at the moment. So we'll get the latest on our good friends up in Connecticut. But first, let's kick this whole thing off with Charlie Pellet.
500 index higher by 7 points at 45.62. That is a gain of about 0.1%. We've got the Dow Jones Industrial Average up 46 right now, up by about 0.1%. NASDAQ higher by 12, up by 0.1%. 10-year yield 4.30% with a 2-year now 4.66%. Gold up $1 the ounce to $2,041, higher by less than 0.1%. And West Texas Intermediate crude up 1.3%, 77.37 for a barrel of WTI. Treasuries pushed higher on speculation the Fed will end its hiking cycle and start cutting rates next year, with traders weighing the latest remarks from U.S. policymakers. And certainly one of the questions for investors is the interest rate backdrop. Specifically, have we seen the peak in the 10-year yield? And that question this morning for R.J. Gallo, senior portfolio manager at Federated Hermes, who was interviewed right here on Bloomberg Markets.
Markets are full of uncertainty, but I do think that we saw peak rates that when we got a little north of 5 on the 10-year, that was an oversold market. And I think that the economy's deceleration and the prospect that the Fed will be easing sometime in the next 12 months, maybe not by May, those all suggest that yields should be stable to lower from here. The big question is whether or not we get a soft landing or a more significant economic downturn.
And certainly more on that topic coming up in just a moment with our Michael McKee. And by the way, you can hear more of the conversation with R.J. Gallo on the Tape podcast. You can download it wherever you get your podcasts. Cannot ignore GM today. General Motors boosting its dividend by 33% and repurchasing 10 billion of shares, its biggest ever buyback plan. GM shares, they're surging now in the fast lane, up 9.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Jennifer Ryan, Paul Sweeney, we're live here at the Build American Mutual offices, Lower Manhattan World Financial Center. Also streaming live on YouTube, so head over to YouTube. That would be the internet for those of you who are not aware. YouTube.com, search Bloomberg Radio. All right, you go ECO, ECO on the Bloomberg terminal. It gets you all the economic data that's getting released, and man, it's busy this week. And I want to start with Michael McKee. He's an international economics and policy correspondent for Bloomberg News. He's back in the studio, back in HQ. So, Michael, when I see a headline of the U.S. economy grew 5.2% in the third quarter, what is up with that? Why do I still hear professional people talking about recession?
Good question. The feeling is that the economy is going to slow dramatically in this quarter. The 5.2% was the third quarter, and it was revised up, although consumer spending was revised down. And since it was two-thirds of the economy, there's a feeling that if consumers pull in their horns in this quarter, we're going to see slower growth, but not recessionary growth. The forecast on the Atlanta Fed GDP now is 2.1%, which sounds terrible. It's less than half of what the third quarter was, but it would be above what most people consider potential growth here. So we're still looking at a strong enough economy. It's just slowing down, and that's what has Fed officials talking about the possibility of maybe being done.
But why have we all of a sudden, lost some confidence in the mighty U.S. consumer? I mean, it does seem to me that the holidays are coming up and there's an awful lot of shopping to be done. So I would have thought that would have been, the prospect for a nice little lift there.
Well, I know you're out buying me something really expensive and nice, so I'm looking forward to that. But the feeling has been for some time that consumers were going to run into the student loan repayments. They were going to run out of the pandemic stimulus they got. Wage increases have slowed, so there would be less buying. We don't really have a handle on that. We don't know for sure. We're going to get some numbers tomorrow for October, personal spending from the Fed. And so that will be very interesting to a lot of people in the markets to see what kind of strength we do see. The Black Friday numbers and Black Friday spending is not really an indication of what Christmas is going to be like, but it was all over the place. If you were looking at the Bloomberg, you saw the headlines that Black Friday spending exceeded everyone's expectations, but in the stores that matter most or sell the most, it wasn't as good as people thought. So we're really kind of flying blind here, and people are just relying on their guesstimates of what's going to happen.
Michael, another big issue for the Fed is the jobs market, and we've seen the unemployment rate inch up to 3.9%. Is there a level where the Fed says, uh-oh, this is kind of getting out of hand here, it's above 4, maybe it's 5. Is there a level where they get nervous?
They would get nervous above 4.5, perhaps. At one point last year, they had the forecast for the end of 2023 at 4.5%. They've since lowered that to 4.1%. So we're still below that. We'll see what we get a week from Friday when we get the October jobs numbers, the November jobs numbers, rather. And if we see a big increase, then they might get nervous at particularly the speed of the increase. We will get some hints with jobless claims coming out tomorrow of where we are. Last week's numbers went down, and that was the survey reference week. So things are not terrible in the labor market yet, and I don't think the Fed is close to being very concerned, but they're watching it because we're getting nearer to their forecasts.
I'll just note that all of the Sweeney offspring are fully employed. All right, they are off the dole, which has been painful for them.
But hopefully also buying you some holiday presents.
We'll see about that.
So, Mike, let me just ask you another data question, if you don't mind. So tomorrow, inflation deflator number, PCE deflator. What is your expectation there? How important is this for the market? And then, how happy is the Fed going to be given given your outlook?
Well, the forecast has been for some time that we're going to see PCE inflation, which is the Fed's preferred indicator. That's the headline PCE is what they target with their 2% goal. The feeling has been it was going to come down on a month-over-month basis, which is what the Fed's looking for, to see continual progress. But the issue will be with the core and whether or not we see core inflation significantly drop. It's forecast to drop, but not a huge amount. If that comes down more, that will get the markets excited. Now, we do expect the year-over-year headline number to hit 3%. That's the Bloomberg consensus forecast, down from 3.4%, which is good news. But if that should get into the 2s, which it easily could with rounding, then you might see an even stronger market reaction because, hey, we've got a 2 handle.
Yep. All right, Michael McKee, thank you so much for joining us. As always, Michael McKee, international economics and policy correspondent with Bloomberg News. Cigna, Humana, in talks to combine in stock and cash deal, sources say, and that's according to the Wall Street Journal. So again, more potential M&A in the healthcare space. And again, if I come back into this life, I'm going to come back as a healthcare M&A banker. Those guys print money all the time. It never stops. All right, let's talk municipal bonds. Why not? Because we are at Build America Mutual. We got a round table of some smart folks here. Eric Kazatsky, senior municipal strategist at Bloomberg Intelligence, finally found his way north of Princeton, found his way to New York City. That's in and of itself an achievement. He's joined by Chris Brigatti. He is most formerly Valley National Bank. He was over there doing some municipal stuff, and he's looking, he'll be back somewhere soon, I'm sure. And let's start with you, Chris. I mean, where do you find, we've had rates all over the place, volatility all over the place. Where do you find opportunity in the municipal market these days?
I think the backup in rates has really afforded people a chance to extend out the yield curve and grab some yield from the longer-term perspective in terms of the duration risk. And that's really the opportunity, to my in my perspective. Look at the fact that we have not seen the rates that are currently available or most recently available. We've kind of ticked down a little bit recently, but we haven't seen these kind of rates since 2007. So, that's a long time to stay on the short end of the curve. So if you're not involved longer, there's a good time to grab some of it out longer.
Can you talk a little bit about what your expectations are for the first quarter of 2024? I mean, we've had Bill Ackman say rate cuts are coming. Do you subscribe to that view?
I do not. I'm a little bit of a naysayer on that. I'm a little more bearish on the overall opportunity set out there. So I think that it's going to be a little bit longer before we get to see those rate cuts. And I think the market and the economy has to really tread some water in here and prove itself to me before I really see the opportunity to cut those rates.
So, Eric, when you talk to investors here, what are they, really most interested in these days as they think about their performance in 2022? I think you guys have a little bit of a gain in your marketplace this year. Yeah. Thinking about next year.
Yeah, well, it's a huge gain, right? This November has been the highest return ever for the muni ag, which is pretty impressive. And I told myself
which we own, by the way.
Yeah, I would not leave the Skillman office until returns were 5% in November, and here I am celebrating this. So investors are really focused on this sort of Cinderella story over the last 2.5 months, right? I think that at the end of the summer, everyone sort of thought the market was like done and dead. They were sort of licking their wounds and sort of thinking about zero bonuses, but it's really been a pleasant surprise coming into December, and we're thinking that positive returns are really going to sort of still have a good tailwind heading in for the last 30 days here.
Yeah, that's what I wanted to ask you. I mean, is there a worry that the market participants are going to leave everything to the last minute, try to get some action going before the end of the year? Or is there something that might we have a sort of calmer holiday season?
So a lot of the activity we've seen on the trading side, and Chris can sort of corroborate this, has really been tax loss harvesting and swaps going on. I think
so if I have a loss in my bond, I tell my Tony to sell it.
Yes.
And what's Tony going to do with this?
You offset a gain in your equities.
Okay.
Most likely what it's been coming out of are funds trying to reset their book yields higher and really sort of capture some of these higher yields. And we've had so much of that activity that yields have dropped, more so than treasuries, which is a good thing, right? There's positive returns. I think going into the last few weeks of the year, we really don't see a fuller pipeline of banking deals, which means it's going to be a little bit quiet. People don't know if this is like a head fake or not, but we're hoping that sort of reverses course as people sort of fully buy into a reversal coming into 24.
So, Chris, I mean, as we think about it, I'm looking at the IN-GO function on the Bloomberg terminal, which gives you the total returns. Boy, if I was in municipal high yield, 4.85% year to date, I mean, is high yield still a place to go? Because people are still talking about a recession, which I'm not buying by the way. How do you think about the high yield space, munis?
I think the high yield space is interesting, but I think the exact point in time we are at right now is a little bit of a challenge because the credit spreads have narrowed quite a bit. So I'm a little bit on the opposite side. I don't know recession is in the cards, but a tougher economy tends to expose some weaknesses for different credits. The weaker down the credit curve you go, the more difficulty they may have. And so those credit spreads could widen. So I think there's going to be a better entry point than right now into the high yield space.
And a couple of times during this broadcast, we've had some people on talking about the amount of money that municipalities have, state and local levels. I mean, how do you see that developing over the coming year? Especially, as you mentioned, we're seeing a slowdown. What's going to happen with the tax take?
I think that the money has been flowing to them. They've had the benefit of having stimulus money over the past several years. In my sense, they've kind of gotten away with a few things. I think they're going to have to start borrowing again soon, and I think that the cash is going to be needed to be put back into the market in a different way. And ultimately, if they're borrowing, that's good for the issuance in the market, and that's going to drive spreads a little bit higher, a little bit wider, perhaps, and really give opportunity for investors in the next year or two.
So, Eric, we had a municipal banker in here earlier, and he was saying, issuance this year in the muni market about $320 billion. Historically, it's about $400 billion. How do you think about issuance in 2024? Is it going to recover at all, or are we still here because the interest rates are high? I'm not going to refinance my municipal bonds, maybe.
Well, refinancing really has been an issue since, 2017, where they sort of took that option away from issuers. So we figured out a way to sort of proceed without it. Yeah, issuance was down this year, primarily driven by rates. But I think next year, look, could it be a little bit higher than average? Sure. But I do think we're probably going to be heading into, let's not call it a recession, an economic slowdown. We're seeing that already in tax receipts for state and local governments. And I think that is going to give them a little bit of pause to sort of go and ask tax voters to approve new bond ballots and to sort of finance things at rates that are still historically on the higher side, right? So I think that we're being on the softer side of that issuance number if I had to sort of put a number on it.
I mean, and then the other side of that is going to be the buyers. And so we've had a couple people talk about the return of the retail buyer.
Yeah.
Can you talk me through a little bit about how that dynamic tends to play out in the muni market, and then what you're expecting for the coming year?
Yeah, I mean, retail tends to wait for the ultimate corroboration of, price return, because as you can see, like momentum has really built in the last 2 weeks, and we already had returns of like 4%, right? So they're waiting until things get richer, then they fully jump in. I don't think retail has fully ever gone away, as we see most of the flows this year have left mutual funds, gone into these separately managed accounts that we've talked about before. And to put some numbers around it, 25% of the whole muni market is now sitting in these separately managed accounts. So it's really sort of a shift from retail saying, we're not going to pay 80 basis points for a mutual fund, but we'll pay 10, 15 basis points for a separately managed account. So I think it's just a shifting of the deck chairs.
So, Chris, how do you think about, we had a guest in here saying that one of the problems in the municipal market, and we see it in the treasury market, the biggest market in the world, liquidity or lack thereof. How does that come into play in your market?
Sometimes the municipal market goes student body left, student body right in terms of whether or not there is liquidity. And when it's vacant, it's really vacant, and it's tough to grab. And when I see what's happened to the dealer community over the past several years, we've had fewer dealers in the space.
And now even Citibank was talking about. Citibank can't get out of the municipal bond market.
You would think not, yeah. And those kind of things scare the market a little bit, and that creates. But what it does is it creates opportunities for other types of participants in the market, perhaps buy-side participants, to kind of fill some of that void, which they've done an admirable job of lately, especially with the opportunity to get into some of the ECN type of space and participate in different ways from the traditional buy from a dealer every time they need to purchase bonds. So there is a way around it a little bit, but I do expect liquidity to continue to be a little bit of a headline.
And real quick, just ETFs, big in the muni space?
Big and growing,
Big and growing.
They're, I think they've tripled over the past 2 years in terms of total. The challenges is how they get employed and how they get distributed, and understanding those dynamics within the ETF space are very difficult to understand sometimes.
All right, gentlemen, thank you so much for joining us. Chris Brigatti, he most recently served as a Senior Vice President, Managing Director of Municipal Strategies at Valley Bank, and Eric Gazaski, Senior Municipal Strategist at Bloomberg Intelligence, finding his way to this rock we call New York City, so we appreciate that big movement there. Looking at the markets here, just it's kind of given up a lot of the gains here. The S&P is up about 0.2%, so still positive here. The Dow up 0.2 as well. Same for the NASDAQ. And again, the Russell is kind of leading the gains here, up about 1%. So looking at the Treasury space, yields coming in slightly. The 10-year Treasury, 4.29%. That's coming in a couple of basis points. I can go out 30 years, get 4.48%. It's not the 5% that we saw, a month ago, but still not too bad. And WTI crude oil up 1.5%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning. General Motors stock hasn't had the best year, and the United Auto Workers strike, well, that didn't help. Well, now the car maker says it's boosting its dividend by 33% and implementing a $10 billion share buyback program to lure in investors. Bloomberg's Katie Greifeld says that's not all.
GM also reinstated its 2023 earnings guidance to levels modestly below what it had before the 6-week strike by the UAW cut into profits. GM said that net income will now be between $9.1 to $9.7 billion. Previously, that range was between $9.3 to $10.7 billion. So clearly, that 6-week strike left a mark.
Shares right now, they're up more than 9%. Now, if you're wondering why GM delivered a $10 billion buyback after signing a labor contract that adds $9.3 billion to expenses, well, the company's CEO has an answer. Mary Barra spoke earlier on Bloomberg.
Our guidance for next year we've already said that we'll be able to offset that completely with the plan that we already had of a $2 billion cost out perspective. So we did the right thing to recognize our manufacturing team members who have done a great job and continue to build vehicles safely with high quality. And we also thought that we've got to look and make sure that we're balanced across all of our stakeholders, and our owners are very important.
Now, to hear that full conversation, tune into the Bloomberg Surveillance podcast. And from the auto industry to software, shares of Workday are higher. They're up about 12%. And this is after the company reported third-quarter results that beat expectations. It also raised its full-year forecast for subscription revenue. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg, and we are watching a developing story, a headline we brought you moments ago. Cigna and Humana said to be in talks to combine in a stock and cash deal. That is according to the Wall Street Journal. Right now, we have got shares of Cigna trading lower, down by $9.35. Cigna now at $276.94. The Dow, the S&P, NASDAQ are all pushing higher. The rally that has driven global bonds to their best month since 2008 gained further traction as treasuries climb on bets the Fed will be able to start cutting rates in the first half of next year. Right now, we have got the 10-year yielding 4.29%. The 2-year is yielding 4.65%. S&P up 10. That is a gain of 0.2%. Dow Industrials up 82 now, also up by 0.2%. NASDAQ up by 0.2% as well. The big story, though, the Russell 2000 surging now by 1.1%. Small cap shares certainly outperforming today. We've got spot gold higher now by $3 the ounce after yesterday's surge at $2,043, a gain there of 0.1%. While West Texas Intermediate crude is up 1.6%, 77.62 for a barrel of WTI. Tesla shares up by 0.8%. Shares are advancing in the run-up to its Cybertruck delivery event. Tesla designed its stainless steel Cybertruck to be something special. It is the first vehicle for the masses that does not require paint. No easy feat. You'll recall the only other company to come close was DeLorean, and it sold just 9,000 cars before filing for bankruptcy in 1982. Again, ahead of the Cybertruck event, we've got Tesla shares up now by 0.8%. Again, recapping, stocks are higher. S&P up now by 10 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Jennifer, Ryan, Paul Sweeney, live from the Build American Mutual headquarters down in Lower Manhattan, World Financial Center here. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio, and that's where you will find us. All right, we've been all over this public finance, municipal finance market today. We've talked to bankers who issue this stuff, get the deals done. We've talked to investors who invest in this stuff. How about the people who actually spend the money? We're joined by one of those folks today, Eric Russell. He's a treasurer of the state of Connecticut. He joins us here in our offices here of Build America Mutual. He was elected Connecticut State Treasurer in 2022, so we appreciate him making some time for us. Eric, thanks so much for joining us here. What is a baby bond?
So thank you for having me. It's a pleasure to be here with you. So Connecticut Baby Bonds is a first-in-the-nation program that we passed in Connecticut and fully funded this year. And the goal is really about addressing generational poverty in the state. And so under the program, for every child born into poverty in Connecticut, there'll be $3,200 invested in a trust on their behalf. And that money is managed by my office, and that money will grow over the life of that child. And between the ages of 18 and 30, individuals will be able to access those resources for initiatives that are all about helping to build wealth. So they can use those funds to help purchase a home in Connecticut, to start or invest in a Connecticut business, to help pay for post-secondary education or job training, or to roll into a retirement account. And we know one of the biggest indicators for someone's ability to build wealth over time is to have some capital to start with. That is a piece to this puzzle, but it really fits in with Connecticut's bigger picture. As we've made a lot of progress in addressing our overall fiscal health, it's also about looking to making investments in people and investing in the future.
So you sold bonds to the public and took those proceeds to fund this program?
So we actually did not. So
okay.
the program was initially proposed that it was going to be bonded. So we were going to issue $50 million a year for 12 years to fund the program for 12 years in total. It was going to be a $600 million investment. And we passed that legislation back in 2021. There was some pushback to funding the program that way. And when I came into office, my main goal was to look at ways that we could fund the program and keep it viable, but also do so at a way that was most cost effective to taxpayers. And so what we ended up doing is we had a debt service reserve fund that was actually there to back bondholders from a previous bond issuance. With much of the progress that we've made in terms of our fiscal health, we were actually able to issue a surety and release the funds from that account. We actually did that through Build America, and we were able to take those funds and move them directly into the Baby Bonds Trust to fully fund it.
Gotcha.
And the benefit there was, one, because we put $400 million essentially into this Baby Bond Trust. We have a longer runway to invest that money now that we're not issuing over a 12-year window. So we're actually able to cut $200 million off the overall cost of the program, as well as eliminate the interest and carrying costs for doing so. And we're really proud of it. We actually just received the Bond Buyers Innovative Deal of the Year award for this transaction. And so, it was a really collaborative effort, but it's an exciting opportunity for our state.
How easy do you think it would be for other states to replicate that? I mean, you've got to have the political will for it, but also you mentioned that you had to go through an unusual sort of financing move in order to get it done. And also, have you had any states call you up and inquire about it?
Definitely. So we've been having conversations with several states. There were states that replicated our legislation that was passed in 2021, and some had moved that through their legislature and out of committee. But there isn't any other state that's actually fully passed the legislation or funded it yet. We certainly have been helpful. I've been in touch with several treasurers that are looking at this program. And I think different states are going to look at different ways of funding it. Nevada, their proposed legislation was to bond as we had initially contemplated. Massachusetts has a similar program that they're going to be moving through their legislature this session. But I think at its core, I think people understand that there is a really significant wealth gap in most states across the country, and it's a gap that's continued to widen. Right. And so as we look at ways to continue to invest in people, it's about really looking at some of these more unique ways of creating more fairness and closing some of these really large wealth gaps we have across the country.
All right, stepping back, as a treasurer, give us just kind of the state of the state in terms of the financial position of the great state of Connecticut.
Sure. The state is doing well. The state's doing very well. We were able to kind of withstand the pandemic well, and it was a challenge. Obviously, we're in a place now where we've recovered all of the jobs that we lost during the pandemic. In 2022, we've had a net 57,000 people that moved into the state of Connecticut. And in terms of our overall fiscal position, I mean, we've made a lot of progress in terms of paying down long-term debt and building up our rainy day fund, which we have at its maximum threshold right now at 15% of our budget. And so, and with that, we've been able to lower costs. We had the state's largest tax cut this last session. And so I think the state overall is doing well. There's certainly things that we are very mindful of in terms of work that we need to continue to do, big picture in our state, but I think there's been really strong support for the direction we're moving in.
As it's a Muni show today, I wanted to ask you about your thoughts on infrastructure investment. I mean, can you talk a little bit about what are Connecticut's needs and what are the big projects that you want to push through in the near term?
I-95.
Yeah.
Come on, let's be honest.
For sure. So I think in looking at Connecticut, one of the big pieces is housing, for sure, as we're not alone in that. But I think both in terms of building more housing and bringing down the cost of housing in our state is really a big priority. I know this is a strong commitment of the governors, and I know it's something that I think the legislature knows would be really big for us. But I think to your point, I mean, transportation, obviously everything up and down the I-95 corridor, and across the state, but really, improving times in terms of rail. I know that we've received a lot of federal money to really improve, to get more trains on the tracks and to really improve time. But I think we have to think bigger picture about these investments too, and try to look at ways to marry transit with community renewal and really investing in communities, bigger picture. And so I think that's what we're going to see moving forward from an infrastructure perspective.
From the pandemic, we had so many companies and so many individuals leave the greater metro New York area for Florida or Texas or Tennessee. How does the state of Connecticut think about attracting and retaining companies to the state? Is it all just about tax breaks, or how do you think about that? What's your strategy?
So I think it's about continuing to invest in our state, and I think we've had to look at ourselves and really address many of our kind of long-standing fiscal issues as a state. I think that is really important to business. I think in our ability to lower costs long-term. And so, we've done that. I think if you look at our fiscal guardrails that were put in place in 2017, which have, they created caps around what we can spend, what revenue we can really count on coming in. We've been able to pay down nearly $8 billion in additional contributions to our pension debt under those fiscal guardrails. And so I think folks on the outside are looking at that knowing that this is a commitment for us big picture. But I think at the end of the day, we have to stick true to our values and why we are strong as a state. And I think it's the quality of life, it's education in our state. And those are all things that we've continued to invest in.
You mentioned the tax cut. Is there room for another tax cut, something to attract companies, and indeed to give families and consumers and households a break?
I think, the governor is certainly looking at ways to lower cost as a whole. We're in a time right now where we see revenues softening. I think this is happening across the board. What's great is that our fiscal guardrails and the budgeting measures we've put in place have us in a really sound position that even with some of these softening revenues, we are projecting surpluses. We will have, by the end of next fiscal year, we'll be at about 18%, so nearly $4 billion in our rainy day fund. So I think there certainly are going to be looking at opportunities to lower costs for families.
Eric, thanks so much for joining us. Really appreciate you taking the time here. Eric Russell, he's the treasurer of the state of Connecticut, joining us here, talking about the state of Connecticut and financing some of the growth initiatives in the state. We appreciate getting your time. Markets here hanging in there with the slight gains here. The S&P is up about 0.3%. Same for the Dow. Pretty much same for the NASDAQ here. Yields are coming in. 10-year Treasury coming down about 4.29% on your 10-year. WTI crude oil up 1.4% at $77. Right now, let's head down to D.C. World and National News. Nancy Lyons.
Thanks, Paul. A sixth hostages for prisoners swap is set to take place today as part of that two-day extension of the U.S. brokered ceasefire between Israel and Hamas. And now we're learning the Associated Press is reporting the two sides have agreed to another two-day extension. This is happening with U.S. Secretary of State Antony Blinken set to arrive in Israel tomorrow for his third trip to the region since the conflict began.
We'll discuss with Israel how it can achieve its objective of ensuring that the terrorist attacks of October 7th never happen again, while sustaining and increasing humanitarian assistance and minimizing further suffering and casualties among Palestinian civilians.
Blinken says an extension is something the U.S. has been pushing for since it means more hostages will be released, maybe including Americans. Yesterday, 12 more hostages were released by Hamas, while 30 additional Palestinian detainees were released from Israeli prisons. As for the world's other major conflict, the one in Ukraine, President Volodymyr Zelensky is calling for a faster buildup of fortifications to prevent Russia from taking more land. Bloomberg's Alexander Kudrytsky is following this from our Warsaw Bureau.
Ukrainian troops are more or less stuck on the front line because they face the equally entrenched and thick defense lines on the Russian side.
Bloomberg's Alexander Kudrytsky reporting from Warsaw. There will be a heavy security presence in place for the Rockefeller Center Christmas tree lighting ceremony tonight. Scores of people are expected to gather around the 12-ton, 80-foot-tall Norway spruce that came from a property just outside of Binghamton, New York. The NYPD is ready for protests, though, as pro-Palestinian organizers have posted on social media for their supporters to flood the ceremony in support of Gaza. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Developing story we're keeping an eye on here. So far, no comment from either Cigna or Humana. But Cigna and Humana said to be in talks to merge. This, according to the Wall Street Journal, citing sources. The deal to combine the giant insurers could be finalized by year end. Again, this according to the Wall Street Journal. Humana shares, they're trading lower, down by 0.4%. Cigna now lower by 4.7%. It is an update for the Dow, the S&P, and NASDAQ. We've got the S&P higher by 13 points right now, up another 0.3%, 45.67 on the S&P. The Dow's advancing 124 points, up now by about 0.4%. The NASDAQ Composite Index up 29, a gain there of 0.2%. 10-year yield 4.29%, with a 2-year that's yielding 4.64%. Spot gold, little change now, up by about 0.2%, 2,044 the ounce. And West Texas Intermediate crude is gaining 1.5%, 77.55 for a barrel of WTI. Bitcoin lower now by 0.5%, just below 37,784 right now on Bitcoin. Chris Grisanti is Chief Equity Strategist at MAI Capital Management. And on surveillance this morning, he told us while the Fed may be done, be careful of what you wish for if and when you are hoping for rate cuts.
What is not intuitive is once the cuts start, things aren't great. The Fed will cut not for happy reasons, but for scary reasons, like the economy is slowing. So I think now is the time to take some profit, pour to your cash, and move towards a little more defensive posture.
And you can hear more of the conversation with Chris Grisanti on the Surveillance podcast. You can download it wherever you get your podcast. Again, repeating our top headlines, Cigna, Humana said to be in talks over a cash and stock merger. This, according to the Wall Street Journal. Shares of both companies are trading lower right now. Cigna, again, down 4.6%. We've got Humana shares lower now by just about actually down by 2.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Jennifer Ryan, Paul Sweeney. We are here at the offices of Build America Mutual. We're down in Lower Manhattan, World Financial Center, broadcasting live here. One of the obviously most important stories of the past 24 hours has been the passing of Charlie Munger. He's the iconic investor and partner with Warren Buffett in the creation of what is today Berkshire Hathaway. He passed away Tuesday at the age of 99. Jonathan Levin joins us. He's a columnist for Bloomberg Opinion, out with a wonderful piece here today, which really helped me get a sense of who Charlie Munger was and the impact he had, not just on Warren Buffett, but on lots and lots of other people as well. Jonathan, thanks so much for taking the time here. Really appreciate the piece you put out today. Give us kind of 2 or 3 takeaways you had from the great life of Charlie Munger.
Sure. So I had the opportunity over the last 24 hours to sort of take a deep dive back into some of his great speeches and shareholder meetings and things like that. And I tried to sort of distill his philosophy into 3 or 4 bullet points. The first big one that stuck out at me from Munger was just take a multidisciplinary approach to things. And I think you see that in Munger's background, and you see that in Munger's approach to portfolio construction. But the guy was a lawyer by training, of course, and had all kinds of interesting interests. He was an avid and very, very good poker player, and he loved to read. Buffett was the same way too. But he liked to say, the best use of your time was, paraphrasing here, to sit on your rear end and read a good book, right? And so, he would pepper his speeches with references to Confucius and Darwin, and Ben Franklin was one of his favorites. He knew about Mozart. And so just a really fascinating guy, and he thought that the way to be a great investor and live a great life was to create this sort of multidisciplinary lattice work in your head, not to be sort of boxed into, I'm an economist or I'm this or that. He thought that the world called for a much more comprehensive approach, and he attributes that to a lot of his success.
You know, it's such an interesting take because I feel like that's not a line that you hear from people a lot of days. You know, show me what your breadth is, as opposed what people want to see these days is show me how you can drill down into this one particular thing, be a specialist. And, you know, one other like sort of angle on that you mentioned in your article is their approach to investing, the idea of not having so much diversity in your portfolio. Can you talk a little bit more about that?
Yeah, so that's the flip side of the coin there. So on the one hand, you know, Berkshire Hathaway had a wide variety of companies in their portfolio, right? Famously, it now includes Apple. You've got a big insurance business in there. And then on the other side, you've got something like See's Candy, which makes peanut brittle that Charlie loved to joke about and nibble on in his sort of press conferences. But Charlie also thought that modern portfolio construction and the wisdom of like just own everything was kind of silly. I think the word he might have used is stupid, right? He thought it was foolish to pursue diversification for diversification's sake, because I think in a way, you know, it's the old joke about diversification. You're better off owning a handful of really good ideas that you know very well, he thought, that you know could perform well in the long run, than just trying to own everything. And so I think that's a little bit of the flip side of Charlie's breadth. I think that there was a limit to how broad he wanted to go.
And even into his later years, he was not shy to share his thoughts on, you know, whatever the story of the day was, whether it's AI or crypto or meme stocks. Still very, you know, I guess public and adamant.
Yeah. Okay. So he was totally hilarious in his bluntness right up to his final days, and that was one of the things that we all loved about Charlie, and we kind of laughed about some of his famous zingers. But when I went back to his 2007 commencement speech at the USC Law School, I realized that. Sort of thinking about what not to do and what is foolish was a sort of a core precept of the Munger philosophy. He liked to call this sort of the principle of inversion. And he said, you know, if you want to know how to live a good life, focus on what could go wrong in your life. What should you avoid? And he specifically talks about things like, you know, avoid laziness, avoid intense ideology, and avoid perverse associations. But when I revisited some of his famous warnings about things like, you know, the AI bubble or crypto or meme stocks, it really puts all of that into some context. Part of Munger's greatness and Berkshire Hathaway's greatness was he knew how to avoid the stuff that was really going to hurt his portfolio at the end of the day as well. He wasn't just great at choosing them. He was good at staying away from the dangerous stuff.
And they also had some misses. I think I've seen them talk about, both Warren Buffett and Charlie talk about, boy, we missed that thing called Google.
Yeah, so there was this great moment. I think it was in 2019 when they were asked about sort of opportunity cost, and they reflected on Google. They also did some reflecting on Amazon, but the way that Munger put it, he felt worse about missing out on Google. You know, so Munger was sort of a conservative guy, the way I see him, risk averse. And this, I guess you could say, was an example of him overdoing that inclination a little bit.
Yeah,
but he
exactly.
really regretted the miss on Google in particular.
Yep. But so many more hits, certainly. Jonathan Levin, thank you so much for joining us. Jonathan Levin, columnist for Bloomberg Opinion. I highly recommend checking out his column on the Bloomberg Terminal, or you can go to bloomberg.com/opinion, and that's where you can find all that good stuff. We're going to have more coming up This is Bloomberg.
Good morning. There could be a new powerhouse in the health insurance industry. Sources tell the Wall Street Journal Cigna and Humana are in talks to merge. Now, the stock and cash deal could be finalized by year end. Right now, we'll check in with Cigna shares. They're down about 5%. Humana down about 1%. And a strong Thanksgiving week helped Foot Locker to raise its full-year forecast. We get more from Bloomberg's Abigail Doolittle.
But in this particular quarter, the third quarter, they did beat comp sales, putting up a comp sales of minus 8%, down 8% versus the estimate of down almost 10%. Adjusted earnings of 37 cents, beat by about 37%.
Foot Locker right now up about 16%. And shares of Alibaba, well, they're moving lower. They're down right now nearly 3%. And this is after Jack Ma sent an internal memo urging employees to, quote, correct course. Bloomberg's Ed Ludlow explains why this is a big deal.
Jack Ma hasn't really been operationally involved in Alibaba since 2020. The stock is way off its 2020 pandemic high. We know about the plan to restructure into 6 individual units. That has largely been scrapped with the cancelling of the plan to spin off the cloud business. The most notable part of it, according to Bloomberg Intelligence, was Jack Ma noting the competition from Pinduoduo, the owner of Temu in the e-commerce space, and basically congratulating them for their performance.
Now, Ed mentioned Temu. It looks like the Chinese e-commerce giant is doing pretty well. The Wall Street Journal reports the company's committed to buying multiple ads during the Super Bowl again. Prices for a 30-second spot can range anywhere from $6 million to $7 million. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Quick data check here. S&P 500 up 0.3% here, 45.68 on the S&P. NASDAQ up 0.25%, 14,317 for the NASDAQ. Yields come in. The 10-year Treasury is down 4 basis points, 4.28% on your 10-year. On the commodities front, WTI crude oil up 1.6%, $77.62 for the crude. And gold up just slightly, call it $2,045 per ounce. Right now, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. Well, as the truce between Israel and Hamas enters its final hours, negotiators from Qatar, Egypt, and the U.S. are pressing for an extension to try to secure the release of even more captives. Israel has vowed to resume its attack on Gaza once this truce is over. U.S. Secretary of State Antony Blinken is traveling to Israel and will arrive tomorrow to further discuss the war and to visit the families of the Americans still being held by Hamas. Saudi Arabia is getting more involved in the diplomatic efforts around the Israel-Hamas war. Bloomberg's Sam Dagger reports the kingdom has offered to invest more in Iran, its traditional adversary, if it's willing to keep its proxies out of the fight.
What the Saudis are offering the Iranians is greater economic and political and diplomatic cooperation in return for Tehran putting pressure on the various armed groups that it supports across the region, not to provoke a wider conflict with Israel.
Bloomberg's Sam Dagger reporting from Dubai. He says it's not clear how seriously Iran is taking this offer, but it has praised the October 7th Hamas attack. A House vote is expected to be taken tomorrow on whether to expel New York Republican George Santos. It'll take a 2/3 vote to do it. Santos has already survived 2 other expulsion votes, but Bloomberg Government Congress reporter Jonathan Tamari says this time may be different.
There's a sense that maybe Republicans might be more willing to actually go ahead and expel him at this point, in part because we finally have an ethics committee report that details him stealing campaign funds for Botox, for luxury, purchases, clothing, things like that.
Bloomberg Government Congress reporter Jonathan Tamari. If Santos is forced out, he would be the first House member since the Civil War to be expelled without first being convicted of a crime. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Paul and Jennifer.
All right, Nancy Lyons, thank you so much. We appreciate it. Jennifer Ryan, Paul Sweeney, live with you. So, Jen, you've got a story here. You're trying to tell me that the Lehman Brothers debts are still out there?
They are still out there, and they are evidently still making people money, which is really a shocker. So what we have today is a story. Deutsche Bank and some other creditors holding some notes issued by Lehman Brothers before it's collapsed just get a big win from a London court. These notes are kind of obscure. They're called Enhanced Capital Advantaged Preferred Securities. Now, that's a big mouthful, but they were once regarded as worthless and sold for almost nothing. And now they could pay out more than 390 million pounds, or, Paul, if you'd like me to translate that for you,
Please.
That's about $500 million.
Okay. Interesting. So that's according to a ruling Wednesday from the UK's High Court and Bloomberg's own calculations. That would be more than double what investors were awarded by a previous court decision. So this marks one of the final issues to be decided before Lehman and its debts can finally be laid to rest. So much money has been recovered by administrators at PricewaterhouseCoopers from Lehman's UK arm that questions over who should be paid first remain highly contentious. Creditors that held little hope of getting anything back are now in the money. And a little side note here. So again, we're broadcasting live from the Build American Mutual headquarters down in World Financial Center. Who was in this building back in the day?
Lehman.
Wow. That's kind of spooky.
I know.
Interesting. Yeah, so the folks here at Build America, they were saying that they found some stuff, like some Lehman stuff in closets and things. Old swag.
The detritus of 2008.
Oh, my goodness. God, I can just remember it. And we can all remember it.
We can all remember it.
The video footage of it, people walking out with their boxes and so on and so forth. At the S&P 500 up 0.3% here. So a little bit of green on the screen. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
A deal on the border could be taking shape. Welcome to the fastest show in politics as areas of common ground emerge from negotiations between Republicans and Democrats on Capitol Hill, along with some major areas of disagreement. We're going to dive into the details on a plan that could help to unlock funding for Israel and Ukraine with Congresswoman Nicole Malliotakis, the Republican from New York, is up with legislation that should see a vote any time now that would ban federal funding for housing for undocumented migrants on federal land. This could be the last full day of George Santos's political career. And Senator Tommy Tuberville tells fellow Republicans that he will end the military promotions blockade that he started. We'll talk about all of these stories with our panel today. Rick Davis is with me here at World Headquarters in New York, Bloomberg Politics contributor, of course, Republican strategist, joined today by Democratic analyst Brad Howard of the Vogel Group. So we've got a lot to cover, and we're going to get to the markets in a bit. First, our conversation, which I just mentioned with Congresswoman Nicole Malliotakis. She's with us right now from Capitol Hill on what is an important day for her and for the body as lawmakers get back together and, as I mentioned, seek progress on a border deal. And Congresswoman, we thank you for joining here. It looks like your bill, H.R. 5283, is going to get a vote right after we talk here today. The Protecting Our Communities from Failure to Secure the Border Act is what it's called here. Of course, the migrant crisis in New York is not lost on us, Congresswoman. How would it change that?
Well, look, obviously the crisis has gotten out of control, and the president unfortunately refuses to undo his executive orders. And Senator Schumer refuses to bring our Border Security Act, which passed in May, to the floor for a vote that would end this crisis by reverting back to the policies of the previous administration that were working to stem the flow. So what I'm trying to simply do here is to prohibit federal funds from now being used to allow for our national parks to be turned into encampment. Those listening from New York City understand that Floyd Bennett Field, which was a park enjoyed by over 100,000 New Yorkers annually, has now been made a migrant encampment for roughly 2,000 to 3,000 individuals. So it's number one, inappropriate. It's wrong to take these public spaces from our citizens. And number two, it's just simply unsustainable. Look what is happening in New York right now with our mayor saying they need to do slash across the board cuts, billions of dollars that they're spending on this migrant crisis that was self-made, by the way, because of the policies of the president and then the misinterpretation of the right to shelter law by our mayor. So those two things have created this mess. We need to just stop it. We are a welcoming nation. We are a welcoming city. I'm the daughter of immigrants myself, but people have to follow the proper process. And the proper process, by the way, for asylum is you apply from the next safe country. We have people from over 120 countries claiming asylum at our border when we're only bordered by 2 countries. Yeah. So people are abusing the system, not to mention that 50% of those cases are denied in court, which means people are utilizing this to gain access to our country, but they don't even have legitimate claims, and they're hurting all the people that are in the system waiting, but followed the rules and have done everything right.
Well, I want to definitely talk to you about asylum law. There are a couple of very specific questions I have for you, Congresswoman. It's not lost on me, though, that you mentioned the Floyd Bennett Field in Brooklyn, New York, on the historic registry. We understand that a lot of migrants who have been sent there got on a bus and went right back to Manhattan because there was nothing there for their families. They didn't know how to get their kids to school. Do you have the votes to pass this bill?
I do believe we have the votes, and I do believe that it will pass with a bipartisan vote, as it did in the committee earlier this month or last month. But what I'll say is this, you're right, and it's not safe for the migrants either, right? There's been significant flooding on that property. It was really devastated during Hurricane Sandy, but even during a terrible rainstorm like we had a few weeks ago, it had a foot of water. So it's not safe for anybody involved. And the reality is the mayor just has to stop doing what he's doing, and the president needs to take action to secure the border. And you mentioned, comprehensive immigration reform.
Yes.
I mean, the Republicans certainly want border security, but we're willing to work with the Democrats on more visas to make sure people can come and work legally. We do have an employment issue in our country where we have a worker shortage. This can be addressed. It could be a win-win if we do it right. But the bottom line is the process needs to be appropriate and legal. Okay, well, what's happening right now, who's benefiting? The drug cartels who are being paid thousands of dollars per person to smuggle these individuals into our southern border. We know from Doctors Without Borders, their recent report, hundreds of these individuals, and just Panama, by the way, in one month, they had been raped, women and children. So it's very dangerous, it's treacherous. People drown daily, and not daily, but regularly in Eagle Pass. Just this weekend, there were 14 people drowned.
Well, let's talk about specifics here, Congresswoman, if we could. I'd like to ask you about asylum reform. I'd like to ask you about the parole system. These are things that our listeners are really kind of keying into now as the contours of a potential deal come together. We're hearing from Democrats in the Senate, Congresswoman, who say they are open to changing asylum law. What does that look like when we come back to it? Is it a toughening of standards for those who can express credible fear, for instance, coming from other nations? What would a change in asylum law look like to you?
Well, first of all, we need to add more judges and asylum officers to actually hear these cases and determine at the border whether they are legitimate cases or not. Because like I said, 50% of these cases are not legitimate. They get denied in court. And meanwhile, they're clogging up the system. The second thing we need to change is this last in, first out system that this administration has put in place, where somebody comes over the border, they're actually first to be heard in court as opposed to people who have been waiting in line. That's really unfair to those who have been waiting years to be able to hear their cases, and now they're being shoved further back in the line because of this mass migration from our border. Third of all, we need to enforce the law that says that you have to go to the next safe country. By that standard, only people from Mexico or Canada would be coming to the United States, and that would certainly stem the flow. People would apply from the next safe country, and then they could wait until their court date, and then they could.
Should that come with a stay in Mexico policy as well?
Well, it should if they are coming from a third country. That's what I'm trying to say. We can actually address all of it where they don't need to stay in Mexico. They would stay in the next safe country. And that's really what the Remain in Mexico was all about. It wasn't just about having people from all these countries stay on the other side of the Mexican border. It was more about staying in the next safe country and applying from there and then waiting your turn in court. So I think if we do those things and add the border security provisions, we would really shut this thing down and have a more controllable process. Remember, 10 years waiting period right now to get a court date in New York City. So adding the judges and asylum officers is a big part of it, but we also have to stem the flow at the border. And
well,
if we increase more visas...
It appears that there's some common ground on that actually you might in fact get Democrats and Republicans together. The sticking point appears to be the parole system, as it's called, which allows essentially the president to give humanitarian exceptions to people from countries like we're seeing now, Venezuela, Cuba, and some others here. Tom Tillis said on the Senate side, of course, a Republican, asylum reform is not enough to get us to the number that we need. So what happens to the parole system?
Yeah, well, you know what? My mother was a Cuban refugee, and so I relate to those individuals from Cuba and Venezuela who are escaping socialist policies, communist policies. I think that we can certainly look. This is what happened, though. The president issued this parole, but then he didn't enforce the border law. So the idea of the parole was so the people from Venezuela can apply via parole instead of coming to the border. And that was supposed to shut down Venezuelans coming from the border, but that did not happen because he managed to keep the system, the borders open, so there's a limit to the number of parole, but then you were not enforcing the people who did not apply by parole, but then came to the border regardless, and that was the whole point of parole, was so they didn't come to the border. So you have to have enforcement, right? Any way you look at it, we need to have enforcement at the southern border. It's not just because the flow of migrants is unsustainable, it is because it is completely unsafe. We have drug cartels who are pushing drugs over the border. They are setting up shop in New York City. I just had a meeting today with the Drug Enforcement Administration. Very concerning. They intercepted 200,000 pounds of fentanyl or derivatives, and that is certainly something that we have to take seriously as we see well over 100,000 Americans dying from these drug overdoses. So there's a lot here that is a problem because of our open border. And what I would say is Republicans want to see border security. We will not give this administration more money to continue processing paperwork. We want our CBP to actually do their job, and that means keeping the border secure so we know who is coming in and out. 1.7 million individuals, aside from the 6 million that had come in and applied for asylum, have come in undetected. That is what CBP estimates. We don't know who they are, where they are, what their intentions are, and that is very concerning to me as a New York City representative in a post-9/11 world.
You are definitely passionate about this, Congresswoman, but I do want to ask you about another matter facing the Republican conference now, and that is, of course, someone from your own delegation, George Santos, the congressman from New York, who's facing, it appears, an expulsion vote at some point in the next 24 hours or so. Will Republicans expel George Santos from the House?
Well, I think the majority of Republicans will, and I think it will be a bipartisan vote, and we need 2/3 of the body to vote to expel for it to be successful. I will be voting to expel Mr. Santos. Look, we earlier this year referred it to the Ethics Committee. We've asked them to do their due diligence. They have. They issued 38 subpoenas. They talked to 40 different witnesses. They reviewed 170,000 pages of documents, and they were able to produce the evidence and determine that Mr. Santos did, in fact, use his campaign donations for personal benefit, for Botox, for a porn website, for purchase of luxury goods at Ferragamo and Immerse. And so we have to take action and remove him. Now, he will have his day in court as it relates to the criminal charges.
Right.
But in terms of being able to continue his service in Congress, we believe we have seen enough and that he does not merit to continue serving in this body, and his constituents do deserve better.
Is this a good message for Republicans right now? Is there an opportunity for you to send this message to voters to say that this is an act of responsibility and that we intend to keep that seat, because Democrats think they're going to flip that for you in New York?
Well, I do think it is an act of responsibility. And look, the last time this happened, it was a Democrat, and it shouldn't be politicized. I mean, you have to remove individuals, a bad apple like that. He lied his way to get to Congress, and then he committed these horrific activities, an inappropriate use and illegal use, quite frankly, of his donors' money. And so we believe that by removing this bad apple, we will be better served as an institution, as a party, and his district will be able to elect someone who is not a fraud. And I do believe that Republicans can hold on to that seat. If you look what happened in Nassau County this year, they have flipped everything. They have flipped their congressional seats. They flipped their county executive, county legislature, the district attorney. So Nassau County, I have good faith that they will be able to elect another Republican. But yes, it will remain a competitive seat as it has in the past.
You don't know what he's going to say at 8 o'clock tomorrow morning. Have you heard from your colleague from New York about what this news conference is about?
No, I have not heard, and I guess we'll find out. Hopefully we'll be able to expel him prior to that.
Wow, and what a day this is going to be. Congresswoman Nicole Malliotakis of New York with us. We appreciate the time as always. Will your bill get a vote at 1:30 as we're hearing? Is that your expectation?
Yeah, the debate will begin at 2 p.m.
Got it.
And then we'll have the vote following that.
Great to see you again, Congresswoman. Thank you for the insights. Grabbing the third rail here, as they say, and that's, of course, border policy, border security, and immigration reform that appears to be the center of this grand debate over funding for Israel and for Ukraine. I'm Joe Matthew in New York today. We'll call it a special edition of Sound On because we've got Rick Davis with us up here as well. At World Headquarters, Bloomberg Politics contributor, iconic Republican strategist, joined today by Brad Howard, Democratic strategist, former spokesperson for the Blue Dog Democrats. Great to have you both here. Thank you for joining, Brad, the conversation. And Rick, it's good to see you here in New York. As we consider what's happening in Washington, there's a lot I could ask you about here, but I'm just going to start with George Santos, because we were just talking about that with Nicole Malliotakis. It does appear that the Republican conference is prepared to say goodbye.
Yeah, I think the Republican conference, the Democratic conference, if there was an independent or a socialist conference, they'd all be piling on this one. Look, I mean, as Congresswoman Malliotakis pointed out, the Ethics Committee did their report, 50 pages. You know, Congressman Guest, the chairman of that committee, a searing indictment like none we've ever seen out of the Ethics Committee. And that's what matters. It doesn't matter ultimately to the House whether or not he is prosecuted for criminal charges. That is not what they're going to vote on. They're going to vote on a massive failure to adhere to the ethics of the House of Representatives. It's a no-brainer. Anybody actually who votes against expulsion has to be questioned as to what they see as the standard.
Democrats, I'm guessing, Brad, are going to vote to expel. I know they were having fun last time keeping George Santos around, and maybe it's a game they can play with Republicans, but Democrats will vote to expel, right?
Yeah, I think for a couple of reasons here. You've got the expulsion on the merits, and I think there is some, I think, credible response from George Santos that that nothing's been proven in a court of law, and there is a concern about the precedent this sets. But this is such a unique and such an obvious violation of your oath of office and the trust you have with voters, and it's well documented. I mean, it's most people always get caught with like accounting and documents and sort of tax evasion is ultimately what gets a lot of gangsters back in the day. This is a similar situation where it is a very clear and documented long sets of evidence that he broke federal law and misused campaign contributions along the way. And so I think just the severity and the clearness of these violations, I think Democrats resoundingly understand that this is something that needs to be rejected and removed from the House of Representatives. But secondly, too, I mean, obviously this is a city of politics, and Democrats think that they can retake that seat. Tom Suozzi, who was the congressman beforehand, is the clear front runner for that seat, and he will be a great member of Congress should he win in a special election.
There's going to be a special and then a real election here, Rick. Is the conventional wisdom fair that Democrats flip that seat?
Not necessarily. I mean, I don't think we have a real handle on what this election cycle is going to look. So going backwards from the November elections in 2024, I think it's a jump ball whether Republicans can retain that seat and retain the House. When you look at the generic ballot, it's pretty dead even right now. So there's no real head fake that's empirical that tells you who's going to win. Now, no question, Democrats have to have a leg up on the special because of the embarrassing nature of the expulsion that Republicans are going to have to get over. So if they can get over that, then they can make it a competitive district.
Unbelievable stuff. Quite a moment that we're approaching here. Rick Davis with me in New York, Brad Howard in Washington. And if you're with us on YouTube, do it now. Go to YouTube, search Bloomberg Global News. Brad will keep you warm with the fireplace in his office. Well played, Brad. I'm Joe Matthew at World Headquarters in New York. We'll have a lot more ahead as we run for the border. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. A major deal in the works, said to be in the works in the healthcare industry. Cigna Group and Humana are in talks to merge. This according to the Wall Street Journal, citing sources. Now the paper says the deal to combine the giant insurers could be finalized by year end. The combination would create a powerful challenger to rivals United Health Group and CVS Health. Shares of both companies are trading lower right now. Cigna is down 6.6%. Humana lower now by 2.5%. We've got the Dow, the S&P, and NASDAQ all advancing. The rally that's driving global bonds to their best month since 2008, gaining further traction. Treasuries are climbing on bets the Fed will be able to start cutting rates in the first half of 2024. 10-year yield right now at 4.27%, with a 2-year that's yielding 4.64%. We do have spot gold moving higher again, up another 0.2%, up $4 the ounce, now at $2,045 on gold. West Texas Intermediate crude up 1.6%, 76.62 right now for a barrel of WTI. So the Dow, the S&P, and NASDAQ holding on to gains. S&P up 9, an advance of 0.2%. The Dow up 119, up by 0.3%. And we've got the NASDAQ Composite Index up 15, higher by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
By the sounds of things on Capitol Hill, a lot has changed here in the debate over border security and immigration reform, even in the last couple of days, as a series of Democrats now, Democratic senators up for re-election, suggest that they're open to some changes when it comes to asylum law. But there are sticking points here, as we just discussed with Congresswoman Nicole Malliotakis. You've got the Republican view there. We're going to unpack this, the obstacles, the sticking points with our panel. Rick Davis is with us at World Headquarters in New York. Of course, Bloomberg Politics contributor, Republican strategist, alongside Brad Howard today from Washington, Democratic strategist, former spokesperson for the Blue Dog Democrats. Great to have you both here. Brad, do you buy what we're hearing and what I just mentioned, that asylum law changes will be the easy part? It's, in fact, the parole system that will be the sticking point in a deal here on the border. You're already laughing, which says a lot.
Look, nothing about immigration reform is easy, or it would have been done by now. And I would add, even this Congress makes it even more complicated. I mean, House Republicans couldn't get their act together to fund the Department of Defense for FY24. They've yet to pass a number of appropriations bills and riders. We're still struggling to pass the Defense Authorization Act, and et cetera. So, even the traditionally easy stuff has become very hard in this Congress and in this divided Republican conference, not to mention divided government with a Democratic president. So nothing will be easy here. I think these debates are important. I think that I hope that at the end of the day, good public policy emerges and is enacted, but I am extremely skeptical that happens.
Rick, you would be the one to show skepticism with your history involving this matter and how close you got to comprehensive immigration reform with John McCain. I wonder how much of this sounds familiar to you versus maybe a new wrinkle when you hear Democratic senators open to some of these changes. The parole system, I realize, is a different story, but do you call this progress?
Yeah, I think it could be progress, right? I mean, as you say, we've seen so many disappointing outcomes when we thought we had a chance at some kind of comprehensive reform. I mean, we're not talking about changing the status of Dreamers or anything. I mean, there's a lot to be done. Guest worker programs, identity cards. I mean, there's a raft of things that should be part of a comprehensive immigration policy. But let's get what we can get today. And in this case, I think it's the perfect combination of Democrat senators especially reading the polls and realizing that anything that they do that tightens up on the ability for the government to do its job on processing these kinds of asylum claims and that kind of great, that's a no-brainer for their constituencies. But their constituencies have changed too. They want that border sealed. And we ran an ad in John McCain's reelection in 2008 and 10 said, build the dang wall, right? And he was for comprehensive immigration, but it got to the point where the people of Arizona said, build the dang wall, John, and that's where he was. So I think that was a precursor to where we are today. Build the dang wall, euphemistically.
Donald Trump call you about that ad a couple of years later?
He didn't call me very much.
I understand, but that's not going to change. Let's hear from the new Speaker of the House, Mike Johnson. It's important today. He crossed the rotunda and sat down with senators at their weekly luncheon here, their steering luncheon, because it does appear this is going to be the path, whether it works or not, to get this supplemental funding request. And we know how Mitch McConnell feels about that. Here's Speaker Mike Johnson.
We believe that the border must be secured, and the vast majority of the people in this country agree with us wholeheartedly. And when we all went home for Thanksgiving and met with constituents and friends and family and had dinner, as you all did, this was a big topic of discussion because people are deeply concerned about their safety and security and all the things, all the societal ills that happen at the border. So that is a top priority for us in all these negotiations to get that secured, and we need policy changes, not just further funding to process people. So you're going to see that as a continuing theme, and I'll leave it there for now.
We know that some Democratic senators do not agree with this, and certainly some Democratic House members. Brad, in fact, a dozen Democratic senators, including Dick Durbin, have put a statement out about the direction of the border talks here, saying they will not accept provisions that make it more difficult for some migrants to seek asylum. So let me ask you about something that Rick Davis just mentioned. Why are progressive Democrats not demanding a component here for Dreamers in a final agreement?
Well, let me add a couple comments. I think the concern among a lot of Democrats with asylum seekers and the way we process asylum seekers here in the U.S. is you got to remember there's a difference between those who are just trying to get in this country for work or those trying to get in this country to, just as a general wanting to move into America. Asylum seekers are fleeing horrible conditions. They're either afraid of violence, of being drafted into a cartel, or their families have been separated, or worse, they face sexual assault and violence in these countries. These are dire conditions, and they're trying to flee not only these horrible situations, again, find refuge, but they're also wanting a better life for their family and their children. And I think all Americans, we are a land that welcomes folks who are fleeing those kinds of situations. And so I think the concern is if you make the asylum process harder, you're actually rejecting the people who most desperately need help. And that's a really, I think, a strong concern of the Democratic caucus that's going to remain throughout these negotiations. But the reality is here, I think progressives understand that these negotiations are great. They're going to, I think a lot of them hope they end in somewhere positive, but that's not going to happen. I think a lot of progressives understand that we have been on this road numerous times. Republicans have no interest in engaging on Dreamers, and I think they're going to wait. And I think they're skeptical that this is going to move through the House, because I don't think Speaker Johnson can put something like this on the floor that gets 218 votes within his conference. I think there's an opportunity he could pick up some Democrats, but if he keeps putting things on the floor where he needs Democrats to pass, then that was the start of Kevin McCarthy's obituary, and it would be the start of his.
Yep, that's treacherous ground, I'm sure here. Rick, the asylum standards make clear that they are there for people with a credible fear of persecution or torture if they are forced to return home. Does that need to be qualified in a more specific way, for instance, to not include economic hardship?
Look, I mean, it's the rules that exist today, right? You want to have the debate about changing the asylum rules? Yep. That's great. Let's have that debate. There may be some cases that you want to include as a result of economic hardship, but that's not the rules today. And absolutely, I think even the most leftist Democrats would agree that you got to adhere to the rule of law. And the rule of law, as we heard from Congresswoman Malliotakis just a little while ago, rejects 50% of these asylum claims. So 50% of the millions of asylum claims that Brad was just referring to are not legitimate asylum claims by the laws of the United States. So how do we stop that from becoming a problem that's inside our border and make it more applicable to the laws we have on the books, which is to keep it outside our border while those claims can be made?
They shouldn't get there to begin with, right?
Correct.
So do we go back to this safe third country idea, remain in Mexico? Is that part of the final?
Yeah, I think you have to actually start to implement the law if you want any credibility to change the law, right? And so one of the points that she was making that I thought was very valid is that by having all these asylum seekers coming to the border, they make law enforcement much more difficult when it comes to getting cartels and human traffickers, because they get mixed into all those things. And so stay away from the border. It's an unsafe place for your families. It's an unsafe place for the law enforcement officers who are trying to keep fentanyl out of our country that's killing our young people. And it's unsafe, for Americans who want to actually do trade and create economic vitality along the border, where there's a lot of good job capability there.
This is where things get more difficult in the debate here. Brad, what is your thought on this in terms of safe third countries, in terms of remain in Mexico? Will that be a no for Democrats?
Well, I think there's a strong difference of opinion across the caucus here. I think the concern at the end of the day for Democrats is that we treat these people like people, that we find the most humane way to process these claims as we investigate them, the most humane way of protecting them and their family from those forces back in their home countries that may be causing them harm. And so, given the humanitarian crisis in places such as Venezuela, the administration has provided lawful ways for eligible Venezuelans to allow them to come to the country. And I think we need to consider these on a case-by-case basis. I think the concern is when people come here, file for asylum, and we send them right back, we're just sending them back into the hands of people who wish to do them harm. And I think we've got to think through that some. But we've also got to understand that we can't just have an open border. I think Democrats have united behind the statement that we need to secure the border, but we need a humane way and a way that prioritizes our national security to sort through those who seek refuge here in the United States.
Yeah. This is the real thing. This is the real conversation about policy without the yelling and screaming that you're going to hear and see elsewhere. And I thank Brad Howard and Rick Davis for a smart talk. We'll have more straight ahead on the fastest show in politics as we bring you up to date now with world and national news. Let's go down to Washington for that. Nancy Lyons in the Bloomberg 99.1 newsroom. Hi, Nancy.
Hi, Joe. Well, the Israeli military says 2 hostages released by Hamas have made it into Egypt today. 10 others are expected to be free. Meanwhile, negotiators, including from Qatar and the U.S., are pressing to maintain the truce agreement for Gaza that is due to end in just a few hours. U.S. Secretary of State Antony Blinken says another extension is needed.
Its continuation, by definition, means that more hostages would be coming home, more assistance would be getting in. So clearly, that's something we want, and I believe it's also something that Israel wants.
Blinken will be traveling to Israel tomorrow, his 3rd trip there since the war began. President Biden is visiting Colorado this afternoon, where he's expected to tout the investments his administration has made into clean energy, specifically wind energy. He'll be touring CS Wind, the largest wind turbine tower manufacturing plant in the world. The company says it's been able to expand its facility and will add as many as 850 jobs in the coming years due to Biden's Inflation Reduction Act. Well, there's a bump in the road for the push to adopt electric vehicles. Consumer Reports says EVs are proving to be far less reliable on average than gas-powered cars, trucks, and SUVs. Consumer Reports' latest survey found EVs from the 2020 through 2023 model years encountered nearly 80% more problems than vehicles propelled by internal combustion engines. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got Cigna Group and Humana shares trading lower after the Wall Street Journal reported the two are in talks to merge. The company said the deal to combine the giant insurers could be finalized by the end of the year. Right now, Humana is down 3%. Cigna shares, they're tumbling by 6.9%. The rally that's driving global bonds to their best month since 2008 gained further traction today. Treasuries climbing on bets that the Fed will be able to start cutting rates in the first half of 2004. 10-year yield 4.26%. Right now we've got the 2-year 4.64%. The Dow, the S&P, and NASDAQ in the green. S&P right now up 10 points, up 0.2%. The Dow up 122 points, up by about 0.4%. The NASDAQ Composite Index up 20, up by about 0.2%. But perhaps the bigger, broader equity market story is the Russell 2000 small cap shares surging now by 1.1%. Spot gold up $6 the ounce to $20.47, a gain of 0.3%. Crude up 1.5%, $77.59 a barrel. Hopes for a Fed pivot intensified today after economic data emboldened the so-called Goldilocks scenario. America's economy did make progress in the third quarter, as we hear from Bloomberg's Vinny Del Giudice.
Fresh government data show the U.S. economy grew at an even faster pace than originally estimated, advancing 5.2% from July through September. Upward revisions to business investment and government spending propelled the gain, offsetting moderation in consumer spending. Housing was also stronger than initially reported during the third quarter. Vinny Del Giudice, Bloomberg Radio.
GM shares now up 10.5%. It is boosting its dividend by 33% and repurchasing 10 billion of shares. Among the names reporting today after the close of trading, Salesforce.com, Synopsys, and also Snowflake. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
As border security is debated on Capitol Hill, never mind funding Israel and Ukraine, which of course all overlap. It's a tough room today for Joe Biden. The President of the United States wakes up to hear from Jamie Dimon and Bill Ackman, both not looking forward to his reelection. Bill Ackman going even further here, kind of amazing, essentially telling him that he's peaked and must drop out of the 2024 campaign. It comes against the backdrop of new numbers from Gallup. Again, tough room. Poor marks for Biden. The headline: Middle East economy, foreign affairs. Look at this: 37% approve, 59% disapprove, unchanged from last month's ratings, which remain in the basement. So let's reassemble our panel. Rick Davis is with us, of course, Bloomberg Politics contributor, Republican strategist. Joined today by Brad Howard, Democratic strategist, former spokesperson for the Blue Dog Democrats, with us today on the fastest show in politics. Great to have you both here. Brad, what do you do for Joe Biden? He's asking you for your advice. He's got a list of accomplishments that he thinks should get him reelected, from infrastructure to the IRA, but these numbers have been incredibly stubborn, and the situation in Israel is not helping.
Yeah, before I get to the advice that I would give to the president, which, he doesn't call me that often, but should he? Yeah. But first, I just want, polling is tricky for a Democratic incumbent in general, because we have a sector of our base that's never satisfied that we go far enough, right? And so they're always going to be disapproving of the president's job performance because they didn't think he went liberal enough. They may be satisfied with some of the things he did, but they want more. For instance, Barack Obama in October 2011 was below where Joe Biden is today, and yet he resoundingly beat Mitt Romney a year later. So there's a factor of that involved here. Am I concerned about the poll numbers? Absolutely. And the president needs to go out and talk about some of these accomplishments, but not in a way that says, vote for me because I've done this. Like, touting your accomplishments builds trust with the voter. I said I would do this. I've done this. Now here's what I want to do for you if you give me another term. And I think that second part of that message, the White House has yet to address. I mean, they're prepared to attack Donald Trump, who I think is going to be the Republican nominee. I think most people do. And I think in that situation, Joe Biden can and will win. But what is Joe Biden's vision for another 4 years? And to the comment that he has peaked, I think you're seeing Joe Biden's peak right now in his career as president. He is delivering time and again. of the work he's doing in foreign policy to strengthen NATO and hold firm with their allies like Israel and Ukraine.
Well, let's hear from Bill Ackman then. We'll get to, speaking of peaking, here's how he put it in conversation with Bloomberg. Rick, listen.
There's actually an interesting candidate who just announced his candidacy on the Democratic side that I would say no one has heard of, a congressman named Dean Phillips. You probably have heard of him, may know him. Met with him recently. I was impressed. I think Biden's done a lot of good things, but I think his legacy will not be a good one if he is the nominee. I do think the right thing for Biden to do is to step aside and to say he's not going to run and create the opportunity for some competition of
Step aside, say he's not going to run. I've peaked. Meanwhile, Rick, Jamie Dimon is urging, he says, even liberal Democrats to back Nikki Haley. Should Joe Biden worry about what billionaires think?
No, Joe Biden shouldn't give it a second thought, but he should care about what his Democratic voters think, and they actually echo a little bit of what Bill Ackman's saying. They are not happy with his performance in office. As Brad was saying, I mean, it's a Democrat. It's hard to manage a group of voters like that. They're very, different ideologically, but they have an incumbent president, and they're putting that at risk. That Democrats alone could lose this election. No help from the independents, who, by the way, aren't also buying the Biden administration's case for re-election. So Republicans are sort of done, right? We could call it a day, and if the election were held today, Republicans will vote exactly the same way they're going to do in November, regardless of who the Republican nominee is. There's a substantial difference in how Democrats and independents see a re-election of Joe Biden, a different Democrat, or even a potential third-party entrant in this. And that's the wild card that this Biden campaign has to start to deal with. And it's basically been the campaign from nowhere, right? I mean, where are they today? What are they doing? How are they trying to help him win these constituencies back? It's their own base that, according to this Gallup poll, they don't like what he's doing in Ukraine. They don't like what he's doing in Israel. They don't like what he's doing on the economy. These are Democrats saying these things. They got to get that straight.
Today, Brad, Axios decided to take a look at Arab American and Muslim American anger over President Biden's handling of the Israel-Hamas war. Interesting numbers here. They're looking at Michigan, Georgia, Arizona, Pennsylvania, and Virginia, all, of course, important swing states that have sizable populations of both. The Arab American Institute estimating from its own polling, about 59% of Arab American voters supported Joe Biden in 2020. It says polling indicates a dramatic decline in recent weeks, and that would jive with what we've heard about younger voters, 18 to 34, who are upset about the loss of civilian life and Joe Biden's full-throated support for Israel. All of these, knowing how narrow divisions are and how close this election is going to be either way, all of these could be game changers. How much of a problem is this now for Joe Biden?
Yeah, I mean, it is a problem. But I would also understand polling after crises like the one we're facing in Israel is temporary and volatile. It always is. And it will not be at this level a year from now, regardless of the situation of the conflict. There may be different issues and different concerns, but you're talking the debate around the war in Israel is so emotionally charged at the moment that you kind of have to let that polling fizzle out and then address it in the longer term. But it is a problem. But I think for all the times that Republicans accuse President Biden of not standing up to the far left elements of his party or the progressive wing of his party, which he has time and again when you look at the legislation he's passed, this is another instance where the president is standing up to the far left elements of his party and doing what he thinks is right for the American people and for the long-term national security interests of the country. And so, I think this is a tense moment in American politics on both sides of the aisle. And I think we'll continue to see how this plays out. He's got to do some work to build relationships and repair those relationships in the Muslim community and in the progressive community. But, I think before Republicans jump up and down, they're not exactly running to the Republican side where Donald Trump is proposing a national Muslim ban again.
Listen, that's a great point. I guess it becomes a story of turnout at that point. But no, these are not going to be converted to the Trump base. More from the panel next on Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellett. Big jump for GM shares today. General Motors rallying by 10.4%. It is boosting its dividend by 33% and repurchasing $10 billion of shares, its biggest ever buyback plan. In an interview this morning on Bloomberg Radio, GM CEO Mary Barra touched on a number of topics, including the cost of that recent labor agreement with the United Auto Workers Union.
We did the right thing to recognize our manufacturing team members who have done a great job and continue to build vehicles safely with high quality. And we also thought that we've got to look and make sure that we're balanced across all of our stakeholders, and our owners are very important. So we think this was a very balanced response when we look at what was done from a labor perspective and what we're doing as part of our capital allocation framework for our owners.
And again, GM up by 10.4%. SoFi Technologies is exiting crypto, even with token prices surging because of increased scrutiny by banking regulators. And with more, here's Bloomberg's Steve Rappaport.
Charlie, the San Francisco-based company, told crypto customers today they'll need to liquidate their accounts in the coming weeks or move to crypto exchange and wallet provider blockchain.com. SoFi was started 12 years ago as a student lending refinancing company. It has since expanded into a slew of other services and received a bank charter in January 2022. In August, the Federal Reserve said it's stepping up scrutiny of lenders' involvement in digital assets. In January, the Fed, Federal Deposit Insurance Corp, and the Office of Comptroller of the Currency detailed concerns with the volatile asset class. Charlie?
And that's Steve Rappaport. Those are our company stories. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Bloomberg World Headquarters in New York today, although Kaylee Lyons will be with us in just 5 minutes from Washington with a lot more to talk about here on the budget battles, the funding battles that are taking place in Washington. Let's bring you up to date on world and national news before we get some final thoughts from our panel. Back to D.C. and Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hi, Joe. As the latest truce between Israel and Hamas enters its final hours, negotiators from Qatar, Egypt, and the U.S. are pressing for another extension to try to secure the release of additional captives and avert a resumption of the war that erupted almost 2 months ago. Bloomberg's Ethan Bronner is in Tel Aviv and says if the pause stops, Israel will immediately go back to attacking Hamas.
It is clear that they want to go after the leaders of Hamas and its military infrastructure. They are saying that they've killed about 5,000 Hamas guys. They were saying there were about 30,000 of them. So, from their perspective, they've made progress, but they've hardly gotten everything they need.
Bloomberg's Ethan Bronner. The Israeli military says Hamas has begun releasing 12 more hostages, with Israel then set to free some 30 Palestinian prisoners. There are no specific or credible threats, but pro-Palestinian supporters do plan to crash tonight's Rockefeller Center tree lighting in New York City. The group, Within Our Lifetime, says it wants to flood the festive event for Gaza, calling for mobilization, not celebration. The NYPD is stepping up security and calling for increased vigilance. Girls and boys born in the U.S. last year both saw their life expectancy improve. It's the first increases since the pandemic. We get more from Bloomberg's Amy Morris.
2022 provisional estimates from the Department of Health and Human Services show life expectancy at 77.5 years, an increase of 1.1 years from 2021, as fewer people died from COVID-19. But the CDC says that rebound regained less than half the years lost to the pandemic, so there is still more ground to recover to get back to pre-pandemic levels. In the 2 years following the onset of the pandemic, life expectancy had the biggest back-to-back decline in a century. Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe.
Hi, Nancy. Thank you. Back here at World Headquarters in New York with Rick Davis and Brad Howard, the Democratic strategist, is rounding out our panel today as we look at the news from Mark Cuban. And well, Brad, I'm going to upset you here, I'm guessing, because Mark Cuban makes headlines, as you guys probably heard, selling a majority stake in the Dallas Mavericks. Sold it to the Adelson family, of course, major Republican donors in Las Vegas. And he's talking, you'll like this, Rick, he's talking about the group No Labels in an interview with NBC News, praising efforts by No Labels to create a bipartisan ticket, which I know, Brad, is something that Democrats are working overtime to prevent right now, because that could favor Donald Trump for a lot of different reasons. But before you get upset, I'm going to bring everybody down off the ledge here. Mark Cuban just told NBC News that his family would disown him. He has no plans to run for president, despite all the speculation in the last 24 hours. Brad, what do you think?
Well, I mean, look, I think it's probably more of a vanity exercise than anything, knowing Mark Cuban. I think he's done some good things in politics, but at the end of the day, this is going to be a battle between Donald Trump and Joe Biden. And anyone who's not with Joe Biden is essentially with Donald Trump. And there's so much at stake, from democracy to the rule of law to our immigration systems down the line. And I think this flirtation with, because Joe Biden isn't doing exactly everything you need or what you want him to do, but you're just going to throw a wrench in the system and give it to Donald Trump, is just so short-sighted to me. So I have grave concerns about no labels and their efforts to disrupt the process, because there's no way that they can guarantee that they're not helping him like Donald Trump.
How about Mark Cuban, Rick? Could this billionaire make a dent?
Yeah, he knows he could never beat Taylor Swift, so there's no way he's going to run.
That I agree with.
I don't know. That could be a unity ticket. I'm not sure where that's going. Rick Davis, many thanks, and Brad Howard. A great conversation, a great panel. Brad, come back and see us. It was a pleasure to have some time with you here on Bloomberg. I'm Joe Matthew in New York. Kaylee Lyons is on the way in next, because hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
2 major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
Will the truce be extended? Welcome to the fastest show in politics, hour 2 of Sound On, as negotiators work toward a longer pause in fighting between Israel and Hamas and the release of more hostages that would come with it. We'll have the latest from our national security team coming up in just a moment, and we'll discuss with Michael O'Hanlon from the Brookings Institution on next steps here and how long this pause might last. We'll have insights as well from Bloomberg senior Washington editor Wendy Benjaminson, and a Bill Ackman prediction now of rate cuts in the first quarter. We'll talk about that with Bloomberg economics editor Michael McKee later this hour. It's all after a look at Wall Street. Charlie Pellett's with us right here in New York with an update on trading. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, great to have you back in New York. The Dow, the S&P, NASDAQ all moving higher right now on this Wednesday. S&P up 10 to 45.65, up another 0.2%. We've got the Dow up 140 now, up 0.4%. NASDAQ up 19 at 14,300, even a gain of 0.1%. The rally that's driving global bonds to their best month since 2008 gained further traction today. Treasuries climbed on bets that the Fed will be able to start cutting rates in the first half of 2024. 10-year yield right now 4.26%, with a 2-year that's yielding 4.64%. Billionaire investor Bill Ackman is betting the Fed will begin cutting rates ahead of when markets predict.
I think they're going to cut rates, and I think they're going to cut rates sooner than people expect, because what's happening is the real rate of interest, ultimately, which is what impacts the economy, keeps increasing as inflation declines, right? So if the Fed keeps rates in the sort of middle fives, and inflation is trending below 3%, or that's a very high real rate of interest, and I think that is having a sort of retarding effect on the economy.
The Pershing Square Capital Management founder made the comment on the David Rubenstein Show, peer-to-peer conversations. And yes, we'll have more on Ackman's remarks with our Michael McKee coming up in just a moment right here on Sound On. 10-year yield, as I mentioned, 4.26%. Gold up $7.50 the ounce to $2,048, up 0.4%. West Texas Intermediate crude up 1.8%, $77.80 a barrel on WTI. Let's make a deal in the healthcare industry with Cigna Group and Humana said to be in talks to merge. This, according to the Wall Street Journal, citing people familiar with the situation. Now, shares of both companies are down. Humana down 4.2%. Cigna lower now by 8.1%. Again, recapping, stocks higher, S&P up 9, a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Okay, Charlie, we thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew at World Headquarters in New York, joined now by Kaylee Lines at Bloomberg's Bureau in Washington, D.C. Kaylee, it's great to see you. We've got what could be breaking news coming here. The latest from Israel is pretty remarkable. Kaylee, as negotiators go for another extension here. We're in day 6. Remember, we had a 4-day pause or truce, depending on who's talking about it, that has led to the release of dozens of hostages. We are, a couple of hours away from what would have been the end of this truce. Negotiators, including the CIA director, are in Qatar trying to see if they can push this forward once again.
Yeah, there's a lot of different players in this game right now, Joe. As you say, the Biden administration, the CIA director, the president himself have been pushing for this brief truce to last as long as possible due to humanitarian considerations. Qatar is involved. Egypt is involved. A lot of mediators trying to see if they can prolong this brief peace between Israel and Hamas, at least for another period of time, knowing, Joe, that while there have been dozens, as you say, hostages released over the last several days, there are still many more being held in Gaza, though not all of them are being held actively by Hamas, is our understanding.
Yes, right. So far, and our numbers might sound or look a little bit different because not all of the hostages were released by Hamas, but so far the group has freed 81 hostages, mainly women and children. Israel, Kaylee, says they have freed 180 Palestinians who were imprisoned. But we're still talking about at least, over 100 hostages who are left, and we don't know where they all are.
Yeah, exactly. And a number of them understood to be American as well, Joe. So there is still work to be done here, and ultimately more humanitarian aid that needs to get in, not just hostages that need to get out. The question is whether or not another agreement can be made, knowing the longer this truce goes on, potentially the more opportunity it gives Hamas to regroup. And as we've had conversations on this show, as well as on Balance of Power, the humanitarian consideration, the consideration for the hostages may at some point run into conflict with Israel's strategic objectives, as Netanyahu still says they will go back to fighting until the end, until Hamas has been eliminated.
Well, let's start our conversation with Michael O'Hanlon, a senior fellow at the Brookings Institution, where he is director of research and foreign policy and a very reliable voice on what's happening in this part of the world. Michael, it's good to see you. Thank you. We understand negotiators are talking about potentially another 2 days. Is that realistic? Are you optimistic?
Greetings. Well, optimism isn't really a word I allow myself to feel too much about this war at the moment because, yes, 2 days of additional relief would be great. But of course, it does, as you just pointed out, beg the question of what comes next and how long whatever comes next would last and what kinds of constraints would be placed upon the use of force, how many Palestinians would suffer, how many Israelis would continue to suffer. So I do think there's a distinct possibility that you could imagine if more hostages are potentially released or proposed for release, then that could certainly lead Israel to accept the burdens that Kylie just pointed out of, or the potential costs of giving Hamas a little more time to regroup. And, I'm not sure those costs are that high at this point. If Hamas has already had several days, almost a week, 2 more days may not make a big difference. So I think Israel, if it can get more hostages back, probably would be inclined to do this. And Israel's probably still refining what it wants to do militarily in the southern part of Gaza in particular, where we see there's been a debate with the United States about just what kind of force to use, whether to get close to hospitals and other such facilities, whether to use certain kinds of weapons or not. And to the extent Israel's still processing all that conflicting advice, advice from the Americans, advice from its own military leadership, desires to eliminate Hamas as much as possible, it may welcome a couple more days for planning.
Well, you say eliminating Hamas as much as possible. How much realistically is possible? As Netanyahu is promising to see this through until the very end, are we looking at potentially indefinite conflict here?
Well, we in the United States remember well, of course, how we felt after 9/11. And at that time, the notion of seeing any al-Qaeda fighters survive our retaliation probably would have been seen as unacceptable. But we all know that 20 years later, there's still al-Qaeda out there. Most of them, of course, are people who were not in the ranks on September 11th, 2001. But some of the original supporters of that organization, we never were able to find. They could just put down their guns and blend back into a population. Depending on where they were, there might or might not ever be intelligence about what they had done to implicate themselves in that original attack or other al-Qaeda activities. Hamas is the same. You know, the leadership, the top leadership, and those who crossed the border on October 7th, presumably Israel is going to work its very hardest and be willing to take some risks and pay some serious costs to get those people. But even that group of, you know, a few hundred or into a couple thousand is going to be hard to identify with complete precision and complete thoroughness. And the other 30,000-ish Hamas fighters who at one time or another have taken up weapons for the organization, I think are going to be a human intelligence challenge that Israel can never figure out in terms of having any kind of basis to say who exactly is Hamas and who's not. So if you literally take the idea of, you know, getting rid of every single Hamas fighter to its logical conclusion, you specify a strategy for a war that cannot be won, cannot be successfully accomplished, and will cause certainly huge numbers of casualties along the way. Israel's going to have to scale back from that ambition. They're going to have to focus on leadership, on the most lethal trigger pullers, on weapons caches, training facilities, major infrastructure, major command and control capabilities, and that's going to have to be their definition of the Hamas they destroy, together with the idea of Hamas as the government for Gaza. I think most of those goals are largely within reach.
We know that Israel has been provided the names of another group of hostages due to be freed today. But Michael, I get nervous about headlines like this one that we're seeing from Hamas, and a claim that the youngest of the Israeli hostages, we've been hearing a lot about it, a 10-month-old boy named Kiefer Bibas. His brother and mother, they say, are no longer alive. There was hope that those names would be in this batch provided to the Israelis today. Michael, if this turns out to be true, this is the type of headline that can change this conversation very quickly.
You're right, and we obviously always want to bear in mind the very human and individual, costs of this conflict, and any casualty is one too many. But I have to say, at a level of military and strategic analysis, I'm surprised how many hostages apparently are still alive. And I would have thought that Hamas might have been trying to deter Israel's initial airstrikes and artillery strikes by putting more of the hostages near the likely targets of those strikes. So the fact that we are still in a world where a lot of the hostages are alive, to me, is hopeful. It's a silver lining of hopefulness in what's an enormous tragedy. And there are going to still be individual tragedies, I'm afraid, as you point out.
Yeah, absolutely. And again, returning to where we began this conversation, there is effort underway to prevent potentially any tragedy from occurring for much longer, keeping the pause in fighting going, including reporting today from Bloomberg that Saudi Arabia is now in discussion with Iran about making investments into that heavily sanctioned economy in return for Iran stopping the backing of some of its proxies, avoiding this conflict spreading any further regionally. Michael, what do you think about that?
Well, that's the kind of hope we all have had for the Middle East for decades. That's always been dashed. The idea of having a two-state solution, but otherwise good governance throughout the region that allows for people to pursue prosperity, and that maybe benefits from some of the richer states investing in some of the poorer states. I mean, these are kind of the dreams or the aspirations upon which a lot of Middle Eastern policy has been based for decades. But look where we are even here in 2023, where for a lot of groups, the idea of being rejectionist, the idea of impeding the progress of one's hated adversaries actually seems to matter more than the benefits of one's own future generations. What was the line? I forget, the famous adage that there's only going to be peace in the Middle East when people start loving their own grandchildren more than they hate their enemies, and allow that prosperity, allow that investment that you just mentioned to actually happen. But unfortunately, We saw an example this past October where Hamas, perhaps egged on by Iran, or perhaps just resourced more generally by Iran, didn't like the possibility of the Saudis and the Israelis getting along better, which would have facilitated investment in the region and greater economic cooperation in the region. And so they carried out the October 7th attacks precisely to prevent that sort of positive development.
Well, we're compelled by it, but not only by the story as such a power play potentially by Saudi Arabia, but remembering where we were a couple of weeks ago, Michael, when all the talk was about a second or third front. If the minimum is achieved here and Saudi Arabia can convince Iran or pay Iran to keep its proxies in check, and this remains a war largely between Israel and Hamas, is that not progress?
Yes, that would be excellent. I'm just doubting whether it will happen.
I got it.
I'm not challenging your contention that it would be progress. I mean, anything that turned people more towards building a peaceful, prosperous future and away from inciting violence and tearing each other down would be great. But, you know, I don't see a lot of basis for thinking that's where Iran's headspace or mindset is right now.
And of course, this idea of how the greater region fits in and ensuring that the conflict does not spill over into other parts of it is one of the objectives of Secretary of State Antony Blinken as he makes another trip to this region. He's made multiple since October 7th when this conflict started. What happens if we don't get an extension of the truce when Blinken is there?
Yeah, I don't know. At least he would be there to try to remind the Israelis to use force more carefully in the next round. You know, I mean, first of all, that guy's a workhorse, and I'm astounded at how hard he's been working. But secondly, I also hope that he's got time and energy to think about not just the tactical day-to-day of extending a ceasefire, but also where we're headed with this. And I'm sure there are a lot of people working for him who are thinking about that question, but I think it's time to think about using a fair amount of American leverage here to push the parties towards some kind of a durable conflict resolution strategy that they may not completely love, but that will leave the place more stable long term. What I'm basically saying is trying to work with others in the region to impose some elements of a two-state solution coming out of this rather than just wait for everyone to get to it. And I realize we can't literally impose it, but we have a lot more leverage with all parties in the region than we're often prepared to acknowledge. And I hope there's some time and attention and just, you know, enough energy in his body for that kind of question to be addressable and not just these immediate questions of extending ceasefires.
I want to hear your reaction to something that the Secretary of State, Antony Blinken, said. Looking beyond the immediate term here, we're talking about the minute-to-minute, hour-to-hour situation on the ground in Gaza. Listen to Secretary of State Blinken talk about the road ahead, Michael, and we'll have you respond. Here he is.
Everyone is focused on the day of what's happening in Gaza right now. But we also need to be focused at the same time, and we are in conversations with many other countries, on what I've called both the day after and the day after the day after.
What does the day after look like, Michael, when none of Israel's neighbors will accept refugees, for instance?
Well, I think that the idea of a two-stage post-conflict strategy is correct, because in the first instance, what you need to do is allow life to resume and start to create some kinds of governance structures that are not just Israel occupying Gaza, but the international community and Palestinians themselves gradually entering into some kind of greater role in at least the civilian governance of Gaza. But then longer term, I hope what he's alluding to is a two-state solution, that we somehow use this terrible tragedy and crisis as a way to make possible what wasn't before, because now at least people realize how bad things can be if we just stay stuck in negotiation paralysis, as we've been for the better part of 2 or 3 decades now. So the day after, to use his framing, is presumably when the conflict stops and you start to recover. The day after is presumably when you get to maybe it's even a 3-step process, but you get to a long-term viable Palestinian polity that can avoid violence in the future and help its own people do better.
Michael, great conversation. I'm really glad you could join us today. Let's not let too much time go by. Michael Hanlon at the Brookings Institution with Kaylee in Washington. I'm Joe Matthew in New York. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. An update on Wall Street with the S&P heading toward its highest since August. Right now, the S&P is at 4566, up 11 points. That is a gain of about 0.3%. We've got the Dow Jones Industrial Average up 152 points, up 0.4%. NASDAQ now higher by 27, a gain of 0.2%. The rally that's driving global bonds to their best month since 2008, gaining further traction today. Treasuries are climbing on bets that the Fed will be able to start cutting rates in the first half of 2024. Right now, the 10-year's yielding 4.26%, with the 2-year at 4.63%. Federal Reserve, meanwhile, has issued its latest assessment of the U.S. economy, the Beige Book. And with that story, here's Bloomberg's Vinny Del Giudice.
Officials meet on interest rates in about 2 weeks, and the Beige Book will help set the stage. Recent comments suggest the tug of war between central bankers on whether to keep lifting interest rates to fight inflation. The Beige Book says economic activity slowed in recent weeks as consumers pulled back on spending money and exhibited more caution toward household costs. Vinny Del Giudice, Bloomberg Radio.
And again, we've got the 10-year yielding 4.26%. General Motors boosting its dividend by 33% and repurchasing $10 billion of shares. Biggest ever buyback plan. GM shares surging on that news, up now by 10%. Gold up $6.50 the ounce to $20.47, up 0.3%. West Texas Intermediate crude up 1.8%, now $77.69 a barrel. Recapping a Wall Street rally underway with the S&P up another 10, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We came all the way to World Headquarters in New York for what could be the last full day on the job for New York Congressman George Santos. That's not really why I'm here. He's actually in Washington. And that's the point, actually, because we could have an expulsion vote. In fact, we expect to in the next 24 hours, Kaylee. He's going to hold a news conference tomorrow morning at 8 a.m. When asked yesterday what he plans to say, he says, well, you're just going to have to show up for that.
Madam Speaker, I think we can all agree that due process matters and that we should all be very concerned about the way that we are conducting this process. I ask that all my colleagues in the House consider and understand what this means for the future. And to set the record straight and put this in the record, I will not be resigning. And with that, I yield back the balance of my time.
There you go. Just like that, he's going to resign, right? Is that what's going to happen tomorrow?
I guess we're going to find out come 8 a.m., although I was listening to your conversation with Congresswoman Nicole Malliotakis in the first hour, and she said she hopes they can expel him before he does that. I guess it's a question of timing.
She was pretty open about it when I asked her, Kaylee, and I didn't even ask her directly. Yeah. I was going to. I said, will Republicans vote to expel George Santos? She said, yeah, probably, and I will. But I suspect if you're a member of the New York delegation, you have to say that, right?